Let's do this thing. Hello, everybody, and welcome to ATP Insights, where we cover the most important tech news in Asia. Today is Thursday, the 30th of July, 2026. Let's get right to it. We're going to talk about China's CXMT IPO surged on its opening day. And we've got another great show, a great lineup of guests today. And initially we'll be joined by Geoffrey Handley, a longtime friend of mine, general partner at Hightower Capital, to explore how regional investment in agentic AI is changing the competitiveness of businesses across China and APAC. Following that, we'll welcome Kirk Pathumanun, CEO at Quest EdTech, to discuss how AI-powered personalized learning will help education providers prepare students for more effectively for technology-driven careers. Then we're going to talk to David Thambiratnam, CEO at Veridapt, to cover how real-time commodity intelligence will improve financial confidence and emission performance in hard asset industries. And then King Leung, Global Head of Financial Services, FinTech, and Sustainability. I always love talking to people actually at InvestHK. We're going to talk about how AI infrastructure and investment connectivity will help businesses use Hong Kong to enter and scale across Asia. Later in the program, we'll also talk to Alex Yang, co-founder and COO&CFO at Tuya Smart, to talk about how AI IoT platforms will help businesses turn connected products into intelligent, autonomous services. And finally, Muks, Syed, founder and CEO at HookedGrowth, will join us to talk about how AI-powered growth systems help founder-led businesses scale beyond their dependence on the founder. That should be interesting as well. And before we get to all of our guests and a little bit of news, let's hear from our presenting partner, Twilio. Twilio is the secure and scalable platform to build amazing customer engagement without the complexity. With the AI-driven workflows you need to connect, they are trusted by over 300,000 businesses. It's the platform that simply makes more possible. Visit Twilio.com to start building today. Okay, let's get to a little bit of news. China's CXMT IPO surged on its opening day. They raised about $8.6 billion in Asia's largest IPO of 2026. This is interesting, though. Their shares closed on their first day of trading at 49 won, compared with an offering price. You want to talk about leaving a little bit of money on the table, of 8.66 won. That's a 460-something% increase. And it lifted its market share to roughly 488 billion, almost half a trillion dollars, and briefly made it China's most valuable listed company. Now, the scale of this change between the IPO price and the closing of that day partly reflects the structure of the listing. This actually reminds me a little bit about SpaceX, which actually had a little bit of a rally yesterday. I think only 6.73% of CXMT's share capital was available for public trading, reminiscent actually of SpaceX's, 4 to 5% that was available for public trading on that first day. And that limited supply it's always going to help magnify the price movement, whether it goes up or down. It's always going to magnify that price movement in an IPO, and also contributed to an extraordinary amount of turnover. Turnover means the sheer value of the stock that gets traded on the first day. And that was approximately $20 billion of stock traded on the first day. Now, the company behind this valuation it's not anymore actually what I would call a marginal semiconductor producer. CXMT stands for Shangshin Memory Technologies. That's the CXMT part. And just so everybody knows, it is China's largest producer of dynamic random access memory. That's called DRAM. Memory chips in one of the country's most strategically important semiconductor companies. It was the world's fourth largest DRAM supplier in 2025 with a market share of approximately 7.7%. And I think this is something we should point out. The scale of things going on in Asia, whether it's in Southeast Asia, in China, in Japan, and I would go all the way east, actually, to Australia and New Zealand, and India as well, if we go all the way west, it's simply way bigger than I think that the rest of the Western world actually understand. You've never heard of CXMT. You just haven't. But it was the world's fourth largest DRAM supplier in 2025 with a market share of almost 7.7%. That's huge. And because we don't know about it, we need to talk about it so we can find out more about it. Its commercial growth has accelerated sharply, which makes sense in the context of everything that's going on actually in the artificial intelligence space. First quarter revenue rose. I mean, these numbers are all ridiculous, right? 719% from a year earlier. And the real number is not even small, $7.4 billion. and it expects first half revenue of between $16 billion and $18 billion compared with $9 billion for the entire 2025. Okay, the entire 2025. Just think about that. They did $9 billion for 2025, and they expect first half revenue to be somewhere between 16 to double that number in 2026. It's also going to, after not being profitable for a while, you have to understand, like, what's the right word? The margins in the DRAM business are not as large as they are actually in the GPU business and the CPU business. And that means that they're also, because of this surge in their business, they are expecting to return to profitability after recording a loss last year. Now, as we all know, this growth is happening during a severe global memory shortage. Severe. I mean, we've talked about this all the time, whether it's on ATP Insights, whether it's on our regular ATP show or AGTP Insights global show as well. There's a lack of chip and memory out there. We know that supplies are limited, supplies are constrained across the board in the entire sort of AI stack, and this is no difference. AI infrastructure is consuming huge volumes of fast memory. While major manufacturers have concentrated more capacity on advanced products, industry analysts expect supply conditions to remain tight and prices to continue rising through the end of 2027, which means that as this demand continues to accelerate, companies like CXMT, which again posted a loss last year, are expecting to post a profit this year and are seeing their revenues just in the first half of the year become double what they were for all of 2025. It feels like 2027 is going to be a good year for them as well. Now, CXMT still trails the global leaders in high bandwidth memory, so HBM, which is the most strategically important memory category for these advanced AI accelerators. And again, we spent a lot of time talking about this. Your typical suspects, Samsung, SK Hynix, they maintain a considerable advantage in manufacturing experience across the board, process technology, and also just their relationships with customers outside of China and customer qualification. Micron, also in this space, remains a much larger and more advanced global supplier. Now, we should talk about this part too. The IPO does not establish CXMT as the technological equal of the industry leaders globally. It gives the company substantial capital to increase production, improve its manufacturing processes, and fund further research. It also gives Chinese investors direct exposure to a semiconductor company that sits at the center of the country's domestic technology strategy. Now, does it really matter to me? And we've talked about this across the board when it comes to chip technology. And to be fair, technology at scale in China. Does it really matter to me that CXMT is not like a technological equal of the industry leaders globally? I don't think so. And I'll tell you why. We've established, I think, over this year, what are we? We're almost at the end of July. Actually, today's July 30th. One more day in July, yeah. But I think one of the things that we've established this year is that, particularly in the AI space, and definitely in the memory space and in the GPU and CPU space, everything right now is so powerful that good enough is actually good enough. We've seen this actually with the stuff that DeepSeek has come out with, the stuff that Manus has come out with in China, the stuff that Moonshot has come out with Kimi K3. They don't have to be 100%, 99.99% the same value or the same efficacy as whatever's happening outside of China. They just have to be good enough. And in a constrained environment where supplies of everything, whether that's the model themselves that are constrained, whether it's understanding the weights or the open weight part of this is constrained, or whether it's the chip side of this from a DRAM perspective, a regular RAM perspective, the GPUs or the CPUs, being just good enough, like just being able to supply something. And to be fair, now that this company has gone through an IPO status and they've raised a ton of money, it's going to give them the ability to catch up. Now, I'm not saying that you can do the same. I'm not saying or suggesting that you can do the same sort of distillation process with a microchip or with a memory chip as you can with some of the frontier models. So there's no way to go out, I think, and distill like what these chips are meant to be. But the way chip technology works and the way it's worked since like the 1960s and 1970s is if you're in the chip business, you hire the right researchers, you just get like monumentally better every single time you roll something new out. And as the fabs become more effective, I'm not suggesting as well that they're down to the 3 nanometer or 2 nanometer perspective that TSMC has. But again, we've seen this already. The big AI providers in China don't need to have the best chips, and they've been able to figure out a way to make their models just as effective internally as some of the frontier models, even without the best technology. So let's talk about this again in more detail. I like to do this. If we have to sit back and think about what does the IPO mean at scale for the progress of China's domestic memory industry, let's just think about it this way. CXMT has moved beyond being primarily like a policy project for the Chinese government. The fact that it's the 4th largest DRAM maker in the market makes it a meaningful supplier in an industry that's traditionally been controlled by Samsung, Hynix, and Micron. I was trying to combine Hynix and Micron together into one company, which is probably not going to happen. Now, the recent revenue growth for CXMT shows that domestic demand is translating into commercial scale inside of China. And we just continue to see this. Here's the thing. I feel like there's a concept outside of China of, and I'm just going to put it into this category of like, get rich quick, get big quick, do something quickly. And inside of China, it almost feels like the tortoise and the hare in a way to me. And I'm not saying that China is moving as slow as the tortoise in this allegory. But what I am suggesting to you is they're taking a really long-term view. And you'll hear me say this, I think, from now. And I think you'll also hear one of our first guests say this. I mean, this is something that Geoffrey, Handley, and I have been talking about literally for a decade. But I think one of the things that and it's not a perfect country. There is no perfect country. But I do think one of the things that the Chinese have become really, really good at is long-term planning. And also taking a long-term view. Because the planning can change over time. You don't know. Like if you want to get from point A to point B, you kind of have to determine what point B is early, the way you get there. And point B can move as well, particularly as technology continues to move really quickly. But this idea of we have to get this done in 18 months or we have to get this done in 6 months is anathema to the way that the Chinese government has thought forever. If you go back and look where the Chinese economy was 10 years ago, 25 years ago, 35 years ago, or even 50 years ago, it is unrecognizable today. And for those of us that have actually been in China, I think my first time in China, I want to get this right. Yeah, it was in the late 1990s, 1998, 1999. And I think if you go back and look at what some of the big cities in China looked like 30 years ago, they are unrecognizable. Even though they were planned out to be what they are today, they're unrecognizable for what they represent today. And I think in the same way, the Chinese are doing the same thing when it comes to the DRAM market, okay? And we know this, right? Because CXMT has, like I said, they had a loss last year. They're projecting a profit this year. But you've also seen like the growth in their stuff. And the fact that it's the 4th largest provider of DRAM globally means that they can just slowly but surely chip away, right? At Samsung's position here, at SK Hynix's position here, and at Micron's position here. And again, if you just think about how large, just how fundamentally large just the technology market, but also the DRAM market is in China, they have a natural market into which they can sell. And to be fair, even if they never sell outside of Asia, that market alone is massive, including, like I said, all the way west to India, all the way east to Japan and NZ, so Australia and New Zealand. Okay, and its recent revenue growth shows, like as I said, that their domestic demand is translating into a huge domestic business. These Chinese technology companies increasingly want local alternatives. They don't want to rely on the West anymore. And to be fair, the West is out there going, we're not going to sell you our chips anyway. Now, I'm not suggesting that Samsung, SK Hynix, and Micron are doing that in the DRAM space, but it wouldn't be surprising if there was some pressure being put on them to stop doing that, particularly in the context of what NVIDIA is already doing in the GPU space, or being forced to do in the GPU space. And they want access to the domestic stuff because they want to make sure that there's predictability, that they can understand. This is one of the things that business hate the most, is when things become uncertain or unpredictable. Businesses don't know what to do. I mean, by definition. But if they have domestic demand and then they can create robust and dynamic domestic supply, this is a big win both for their customers, but also for CXMT. Now, we know, and we already said this, the company remains limited and a little bit behind in advanced memory. its position is they're not just like a one product company. Its position is much stronger in conventional DRAM than it is in HBM, where technical performance and customer approval standards are significantly more demanding. DRAM is more like a commodity, which is fine. But again, these Chinese companies are really good at saying, we're not good at this today. We'll be better at it tomorrow. And at some point, we'll catch up to you and we'll leapfrog you. And I mean, I can give you 100 examples of this. Okay, just look at the high-speed rail in China. Look at the energy production. I was reading something, I think, on X yesterday that said, or this morning, that said that China has created 10 times more energy capacity in the last decade or in the last 20 years than the United States has. Just think about that. 10 times more energy. And why is that so important? Well, I mean, one of the biggest constraints for AI and for the data centers, whether it's data centers for AI specifically or just in general, is that energy actually becomes a really important roadblock. If you don't have enough, you can have all the machines in the world, but if you can't plug it into the grid and you don't have enough energy to run it, as I like to say, what are we doing? Okay. Now, as I mentioned, this IPO gives CXMT the financial resources to narrow the gap in their expertise in both the HBM space and in the DRAM space. The company plans to take these proceeds towards capacity expansion, manufacturing upgrades, and R&D. And that's actually really important. Now we have to ask ourselves again, why has memory itself, why is DRAM so important to the economics of AI? Well, AI systems, right, whether they're on-prem, off-prem, on-device, off-device, or whatever, they need access to very large volumes of data. And this makes memory capacity and bandwidth important constraints on the performance of AI servers. Demand has increased faster than the industry's ability to add qualified production. And that's tightened supply and strengthened pricing across several of these memory categories. And that's important. This is great news for these memory suppliers, right? Kind of bad news if you're out there on the side of buying this stuff. But again, you want more capacity. You want a company like CXMT, whether they're competing with Micron, whether they're competing with Hynix, or whether they're competing with Samsung. As a consumer of those goods, you want there to be as much supply as possible. It'll start easing the pressure on the upward trajectory of prices, and it'll just make capacity better for you. You'll be able to buy more of these chips, and that's important, actually, okay? Global manufacturers have prioritized high-value products for AI infrastructure, and this can reduce the capacity available for more conventional memory and extend shortages into other parts of the market. And this is what I was saying before, right? This idea that you want to be in a high-margin business, and by participating in a low-margin business, you may take some of your investment money away from the stuff that's going to bring you high margins. And that's not great for you. Right. So this is one of the other constraints that they have, is that memory companies now capture a larger share of the value created by AI infrastructure spending. CXMT's listing gave China's investors a direct way to participate in this cycle. And actually, that's important too, right? Because they did a domestic listing. They didn't list on the NASDAQ. This is one of the sort of Chinese priorities. And we'll talk to Geoffrey about this as well when he comes on the show. But that idea that you can now give some of the upside of all of the investment that's taking place in the AI space to some of the domestic Chinese investors is a good thing, not a bad thing. And for anybody that participated in the IPO and got a 466% return on day one, I mean, kudos to you. Let's see what happened to SpaceX stock yesterday. Okay. After rallying up to 116, it's right back down to 112. I'm just going through this again so you can understand just like how this stuff moves. And if you look at the 1 month chart of SpaceX in the United States, when a company literally has like no chance of having a profit soon, this is what's going to happen to it, particularly after an IPO. It'll be interesting to see. And we'll try to follow the progress of CXMT as well to see just like how much of the first day valuation spike was supported by the company's fundamentals. We know, and we did say, as we wait for our first guest to come in, it looks like he's doing some pretty funny stuff, that the operating momentum at CXMT is actually pretty substantial. As I said, its first quarter revenue increased more than 8 times. That's insane. and its first 2 quarters, so the first half of the year, they should have double the revenue that they already reported for 2025. That's amazing, right? Now, the offering was also priced below, and this is pretty standard or pretty, it's an SOP, standard operating practice, I think, for most IPOs. It priced below the valuation multiples of several of its global competitors, and Morningstar estimated that the IPO price represented roughly 1x projected 2027 book value, compared with more than twice book value for international peers. But again, even if they doubled the price of this, it still went up over 400%, right? So let's just say it went up 300% on day one. It's still a massive increase. And let's just keep following this to understand like where the rest of this offering is going to go and where the rest of this company is actually going to end up. The closing, CXMT ended its first day worth almost 6x its IPO valuation. Just think about that, despite holding a much smaller global market share than its established leaders. Now, we did say this when we went through like why. The fact that like a small amount of all of the available shares for the company kind of amplified the fact that this stock went up on day one. But again, that was the same thing that happened to SpaceX. But this company's revenue generation and its revenue projections, even for this year, are so much better than, let's say, some of the other listed companies that did an IPO in the United States, and SpaceX is the kind of poster child for that. Now, with less than 7% of the company initially available for trading, the market price was determined by a limited pool. But again, this is the same thing that happened with SpaceX, of shares rather than by the evaluation of the entire company changing hands. Although, to be fair, as I did say, $20 billion traded on day one. That's a lot. Like, that's a real lot. So the fact that there was that much liquidity in the stock, I think, is actually kind of important for that thing going forward. Now, let's just talk about this a little bit as well. What is going to be the impact of CXMT's expansion? How's this going to change like the global memory market? Does it matter? How much does it really matter? Well, I think the most important thing, and we kind of hinted at this earlier, is that China is trying to create a self-sustaining domestic market, not just for the large language models, not just for the labs that are creating the models that people are going to, that companies and individuals are going to use, right, to increase their productivity, to increase the types of tasks that they can get done using artificial intelligence, but also on the hardware side. Right. And from hardware, I just mean the servers that run the large language models, the chips that run them, the GPUs that run them, and the DRAM, among other things, not to mention the power. So China's made a huge investment in this stuff because they want to have and don't take the word sustainable incorrectly. I don't mean like from a climate sustainability perspective. They want to have a long-term, self-sustaining, internal domestic market. First of all, that could just serve the domestic market just because it's so huge. But second of all, that can serve that market in a way that has no uncertainties associated with it. All right, let's get back to this idea of markets themselves, whether it's tradable markets or whether it's wholesale markets, don't like any type of uncertainty, because then you can't do the proper type of price discovery. You can't do the proper type of planning. And again, we said these Chinese companies are taking a really, really long-term view on where they're going to go on this stuff. And I think that that's true for the individual companies as well, not just for the companies that are directly associated with the government. Okay, you have to understand the way these companies are behaving is that they're going to want to take a very long-term view on this stuff. And that's why this matters, not just for the domestic market in China, but for the global market as well. Because think about this. We've already seen NVIDIA, who has restrictions on what they can and cannot sell into China. It used to be 20% of their market. Just think about how big that is. And NVIDIA is still a $5 trillion market value company. So just imagine if they had 20% more business, or if 20% of their business was not taken away from them. And I know that CXMT is not in the GPU space and not in the CPU space either. But just think about some of the restrictions that some companies have on them into selling into China, and how CXMT and others of the domestic sort of suppliers of the tech stack, whether it's hardware or software, can take advantage of this. Now, if CXMT can reduce China's dependence on imported DRAM, this would give Chinese hardware companies more control over procurement and pricing. And this is the thing I was trying to explain, right? Like if you don't have the predictability, if you don't have, I wouldn't necessarily say certainty, because certainty is not really the opposite of uncertainty. But if you just don't have some kind of predictability built into your system, whether it's for memory, memory or not, you're going to have a problem. Okay. We are getting close to bringing our first guest in. I'm presuming, Martin, you can hear me, yeah? No worries at all, man. I love having the producer on the show. It's my favorite part of the show. Um, so if you think about it, let me get back, but let me know when he's ready, and then we can move on to it. But like the more production from a company like CXMT based on the amount of money that they've raised, if they want to increase their capacity, like what's going to be the impact on the global market? Well, I mean, just think about it. If you're just running on pure like microeconomic or macroeconomic theory, like greater production could eventually put pressure on global memory prices. This is good not for the suppliers of memory, but for the purchasers of memory, for the consumers of it. Right? If I want to buy a bunch of memory chips, and I believe that more capacity is coming online, there could be downward pressure. I don't want to say deflationary pressure. That's a different thing, but there could be downward pressure on memory prices. And that effect will depend on how quickly CXMT can actually add capacity and not add supposed capacity, let's say, but add reliable capacity, right? Anytime you're building memory chips, you know that like there's a yield associated with it. It's not that every chip, whether it's a CPU, a GPU, whether it's RAM or DRAM, every time you do production runs for this stuff, a certain number of those chips end up not being usable at their highest possible rate. So you're not getting 100% yield. But this ability, it depends on like how long it will take them to add reliable capacity without sacrificing manufacturing yields. Now, what's going to be the impact on some of the global leaders? Well, the global leaders are likely to preserve their advantage for HBM, so high bandwidth memory, right? This is actually really important. A different product than the DRAM. And part of the reason why is that their position is supported by established production processes and deep relationships with the companies building advanced AI accelerators. And this is one of the other things too, is that you kind of get used to, particularly from a DRAM perspective, right? Just like taking that DRAM and plugging it into your systems and not really thinking about it or worrying about it. And if you're already buying stuff from Samsung, from SK Hynix, or from Micron, you know that with the caveat that if you can get access to their capacity, you know it's going to work because it's always worked. You've always used it. And as great as the technology, and again, you need that predictability. This is one of the things that we've been talking about all day today, right? Is that you don't necessarily want to be in a position where the artificial intelligence market is moving so fast and the ability to create the right amount of server power and compute is moving so fast as well. That you want to make sure that if you're buying products to be able to do this, and again, on the DRAM space, right, this is going to be really important in the artificial intelligence world. But if you're doing that, you're going to have to be in a situation where you want to make sure that the products you're buying are reliable, but that they also fit into the rest of your workflow without sacrificing any of your own productivity. Now, that's why the global leaders, they don't have that much to worry about. I mean, they still have to kind of look over their shoulder a little bit, look behind them to make sure that a company like CXMT is not going out and outselling them. And also, like, it's going to be hard to lose those relationships, I think, in a way that's really quick. So that's kind of important as well. Now, export controls remain an important constraint too. Restrictions on advanced manufacturing equipment could slow CXMT's progress and increase the cost of closing the technology gap. That's always something that could possibly happen to them. We're not in a position yet where where all of this stuff that China is making is necessarily manufactured there, so they could have some problems there. And before we get to our first guest, Martin, let us hear from our second sponsor, Boomi. Boomi is the data activation company for artificial intelligence. It powers the agentic enterprise by bringing data to life across your business trusted by over 30,000 customers and supported by a network of 800 plus partners. Boomi helps organizations of all sizes achieve agility, efficiency, and innovation at scale. Let's welcome our first guest, Geoffrey Handley. I can't even remember when I first met Geoffrey, actually, but it was definitely a while ago. Let's bring Geoffrey in, Martin. Geoffrey. Can you hear me, man? Can you hear me now? I can. You're a little bit lagging, but let's see if we can get this done. Martin, let's bring him in. There you are. You're in China right now.
Can't hear you, mate.
You cannot hear me.
Yes, I can hear you. Want me to reload the page? Okay.
His connectivity is not great, Martin.
Oh, I can hear Mike now.
Okay. So, Geoffrey, let's try to get through some of this. How are you, by the way?
I'm good, man. How are you?
Yeah, I'm good. I feel like my connectivity is way better than yours. You keep coming in and coming up, but you can hear me okay, yeah?
I can hear you right.
Okay. Look, we wanted to talk to you about how regional investment in agentic AI is changing the competitiveness. Let's just talk about this. Let's just jump right in because we've lost a little bit of time, but how are investors thinking about agentic AI inside of China or inside of Asia? Maybe if you can comment on that, particularly from your from your space at Hightower Capital.
Sure. If you're talking specifically about investors, I mean, there's a lot of exuberance, right? Because there's a pipeline of IPOs and some recent IPOs. And so there's liquidity coming out. I think also over the past 2 years, as China's been forced to develop their own chips, develop their own software, and what they've come up with is basically open source, open weight. And it seems that is where the world is going towards. China hasn't been pushing it. China just released it. And that's the direction. And it seems that the world is appreciating that, especially, last week or this week's rogue hack. Those guys had to use Chinese software to fix it because the closed loop stuff wouldn't do it. So I think that's a proof case in itself where we've said we need guardrails, we need open source, open weight, and the reality was there was a screw up on the American side in the closed loop land by OpenAI, and the guys that got attacked, if they didn't have access to the Chinese open source that they used, which was a fairly small model, was it called GLM 5.2 or something? Then they'd have been in big trouble, But general investor consensus is very positive, especially with the pipeline of IPOs that are coming out of either the Shanghai Starnet or the Hong Kong exchange.
What do you think the significance is of this open weight stuff? Can you talk a little bit more about that? Because you talked about it a little bit, but I mean, I think this open weight thing is going to be the way that things are moving going forward. We spent a lot of time talking on ATP, but also on our other show, AGTP, about the significance and the impact of open weight. Do you want to talk a little bit more about that if you can? Why you think it matters so much outside of the thing that's happened most recently?
Yeah, sure. I think it almost, in a way, it almost goes back to, when we were arguing about Linux and open source back in the day. Obviously, this has many more implications, but, even Jensen Huang came out the other day and said, look, we need both, right? We need open source, open weight, and obviously we need the closed stuff. He wasn't the only one. Fidel from
no, there were
Microsoft
something like 19 or 20 or a bunch of companies that came out and signed that letter, right?
they signed that document and they said we need them both. So, you know, then when you got politicians involved, which is like the current ones, which are just antagonistic, they're going to go, oh, shut all that stuff down, you can't use it. And it's like, well, hang on a second, we've just had a real world rogue element escape, and the only way it was solved was through open source and open weight. Now, this is not even taking into account that open source and open weight is way cheaper. You know, so many of them match, so Kimi matches, whereas Alibaba's QN doesn't, but just yet. ZAI matches. I mean, we've even got Meituan, the food delivery company, that have developed Longcat, and so there's so much out there that I think the pricing, the use of energy, and the access to the world, right? China's basically hasn't set any antagonistic guardrails and said, oh, don't let the world see this and don't let the world use this. They've said, no, like this is the way it should be. So I really do think it should be a mix. I think we need them both, but I still think we need a universal philosophical discussion and some kind of agreement at a global level that says, what are our guardrails on these things? Because at the moment, stuff's just being released. You know, I mean, there are kids just releasing stuff, and if they're using the open source to release it, it's going to cost them nothing, near to nothing. They release this stuff in the wild, and you know, we just literally have no idea what's going to happen.
So Geoffrey, one of the things. Go ahead. No, go ahead.
I was going to say, from a personal point of view, when I see companies, AI companies, and I look into their business, you know, I'm asking them, do they have anyone with a philosophy degree in their team? Have they consulted anyone with an anthropology degree or sociology degree? Do they have a constitution that's written into the AI? And very few do. You know, I'd say one out of 100 of companies that I see, they haven't even thought about these things. Like, you know, what is the constitution that you're going to set inside your AI, just yourself, to put guidelines in there? And these teams themselves haven't figured it out. They're just coding stuff, and that's what really scares me.
Yeah. So what do you think about this idea? Look, when atomic energy, I wouldn't say when it was first discovered, but you have the IAEA, right? The International Atomic Energy Association, and everybody kind of either nominally participates or really participates in it. This is a global, you know, entity that says, like, it thinks about the non-nuclear proliferation, right? It also sets policies and guidelines around how nuclear power should work. But are we in a place globally or geopolitically where we feel like, and again, I don't want to talk about this administration or that administration, just in general terms, do we feel like we're in a position where we actually, the world has the wherewithal today to say we need another thing for this, but it needs to be for artificial intelligence? Because the big concern here is that Europe's doing one thing, India's doing another thing, China's doing its own thing. Is Japan even involved? And the USA is like doing another thing. There's no international organization. Do we need that, do you think, to get back on the right track for these guidelines that you're suggesting we need?
Yeah, I definitely think that's part of the answer. I mean, look, if you just skin it back to basic terms, if you want to produce pharma drugs, it's got to go through a process in the FDA before it can be released into the public. If you want to produce food, right, it's got to go through a process through the food in every country and the EU, and a global situation that says this is what is allowed or not allowed in food, so that we don't kill humans, right? In banking, you know, anything that's systemic, right? We have global banking regulations, and we have country banking regulations which feed into it. And as you said, we've got the IAEA for atomic energy, but yet we've got no consensus at all, zero. And the scary thing about this is that I can't build an atomic bomb by myself. Yeah, I can't.
No,
it's just not possible. No matter how smart you think you are, you can't, right? Okay, I can't build medicine, right? I mean, I'm sure I can be a drug dealer, but I can't build medicine and put it on ads on TV and put them in doctors' hands on prescriptions and put them in hospital by myself without this structure. Same as with food. I can't just put food in Whole Foods and say, hey, don't worry about it, it's okay. And so you've got this situation where you've got this such a powerful tool. And unfortunately, I think that the people that, whether it's the UN or the IEA or that type of body, I just don't think they get it, right? I don't think they fully understand how far advanced we are. And secondly, is that I can create whatever AI I want to create in my bedroom, right? Like one or two kids can literally create something that is going to shut down power systems, shut down banking, like whatever they want to do. And so that's the big difference between atomic energy, between food production, between pharma and medicine and all that is a kid can actually create something, and they're creating things without thinking. They're not doing, I mean, I haven't met anyone that's malicious on purpose, but I'm sure there are. But the kids that I'm meeting, the youngins are, they're building stuff how they think it should work without any consultation from elders, if you want to call us elders, or people that have a background in philosophy and humanities and all this kind of stuff to create a constitution. And I think it's the amount of money that's gone into it as well is just pouring in. So they're just constantly churning out code. And that's where we're scared. I think there definitely needs to be a conversation.
So
and it's just not happening.
I'll be honest, like in my mind, at least the last time, and we've spoken to each other a bunch of times, both on the show and off the show, you've always seemed to me to be like a technological optimist. I mean, otherwise I don't think you could do what you do and do it as well as you do it. Which part about this, like when was the tipping point where you just thought like, this could actually be scary? Because it seems to me that both Sam Altman, and I'm just using these guys as proxies, right, for the rest of the industry, but like Sam Altman and Dario Amodei have used this idea of the model's too dangerous. It seems to me like more of like a marketing thing, but you're expressing some real fear about this from your perspective, and you see things differently. Like what was it that happened that made you feel like, this is scary?
I think it was probably about 2 or 3 years ago, maybe 18 months ago, when I started to see business plans that were just not business plans, right? Like they weren't thought out. It was just guys with an idea. And so first of all, when you see that and you see those getting funded, I mean, even if you look back last month, right? Like last month out of Y Combinator, 2 kids walk out the door. So they go in with a piece of paper and an idea. They go through the process, they walk out the door, and their company's valued at $100 million. And they've got VCs lined up all behind them. Like, that's a shot. That same week, in Malaysia or Singapore, there was a kid, no product, no team, 1 piece of paper, and he got $25 million. I mean, I've got 5, 6, 7, 10 different examples of these, right? Where there's no thought gone into these things, and people are throwing money at it, and that's the first signal, right? Like I'm looking like shit. This is like .com days when you could just come up with a URL and then go and raise money. Okay, but the .com days with the URL ain't going to kill you, right? The URL ain't going to do anything by itself. Yeah, it's just going to waste money. But these guys the kids are they're way smarter than us. They code faster than us. They know what they're doing, but they don't know what they don't know, right? And we live in this polarized environment where you get people like Alex Karp on one side going, yeah, this should be national security and we should stop everyone and our AI should attack everyone else's AI. And then you've got on the other side trying to go, hey, chill out, bro. Like we're just doing open source stuff and we're doing it specific to the industries that we've said we will do in our last 5-year plan, right? AI and robotics. Now that scares me. AI for the autonomous cars, right? Like it all fits the plan that was presented, whenever it was in 2016 by the Chinese government. And that's where the AI boxes are. But because they're open source, people can use them for whatever they want to use them, right? And really in the last 2 years, like you said, I mean, previously I was gung-ho on anything. Like, there's rules, I'm going to break them. But when it comes to this stuff, it's worlds apart, right? And I think it's also the political rhetoric that we have now. Sending rockets to Mars and shit without any control, without any oversight. Presidents that are just saying stuff and bombing people, and companies like Palantir who are doing things that are questionable. And they're setting the example. And so when you look at that, then what's going to stop a 26-year-old from going, well, shit, if those guys are saying it's okay, then screw the rules. I'm just going to come up with something that's wicked, and maybe they'll buy me, or maybe I'll be famous, or whatever it is. It just boils down to self stuff. And I think with this thing, we're just children. We're children, and we don't really know what's going on. So we need adults in the room. And unfortunately, most of us aren't adult enough to understand fully the implications. But if we get a group of us together that are semi-adulted from different perspectives, at least that dialogue happens, right?
Yeah.
Like we're not even having that dialogue. And that's the scary thing.
It is. I think that's so. I'm going to leave you with this. We have our next guest is coming in a moment, but Geoffrey, I'm going to leave you with this. I feel like there's a leadership gap globally on this stuff, and it feels like the inmates are running the asylum, and I feel like you feel the same way on this. And again, I'm surprised because I think both of us are actually technological optimists. At least I've been this way my entire life, and for the first time, I feel like and yeah, for sure. And
Absolutely.
I think technology has benefited the existence of humans for hundreds of years, whether it's, you go all the way back to fire. Like having fire is better for us than not having it. But every time that we've had something that
100%.
had right, but every time we've had something that presented an existential threat, the universe or the world has actually gotten together and said, this is a little too dangerous for any individual, any group of individuals to decide on their own. Let's try to manage this together. Let's leave with that. Yeah. And maybe we should have you back on to have a longer discussion about this. But I want to thank you for coming and doing this today because I really appreciate your time.
Would love to.
Yeah.
I really appreciate it.
It's my pleasure. It was great to see you again. Great to have you. Yep.
Good to see you again.
Thanks, man. Cheers for now. Okay. HCL. HCL Tech is supercharging progress with AI that moves beyond ambition and delivers real business impact. A recognized artificial intelligence leader trusted by global enterprises to turn technology into real transformation, HCL Tech is supercharging progress. Martin, let's bring Kirk in. Kirk, are you there? Hey, man, can you hear me okay? You sound great. Just give me one more second.
No problem. No problem.
Okay. Look, we wanted to have you thanks again for joining us today. We wanted to have you come in. We want to have you talk about how AI-powered personalized learning, this is actually super interesting, will help education providers prepare students more effectively for technology-driven careers. But tell us a little bit more about Quest EdTech before we jump into this in more detail.
Well, sure. Quest EdTech came from Quest Language, where we used to be an online school. And Quest EdTech was founded in 2018. We are seed funded to become the coding educational online. And then during COVID, we launched, 2022, we launched Duphonics during the COVID period.
Got it.
Where we have the metaverse and the telenannies using content, teaching young learners online during the COVID lockdown. And post-COVID, towards right now, we actually got into the agentic system using multi-models languages to basically train the enterprise space right now at the moment.
Got it. What fundamental problem becomes solvable when everybody can have like their own intelligent tutor? Do you know what I mean? Because if I have to learn from Kirk directly, that's super cool because Kirk is super smart and he may be a great teacher.
Yeah.
But having a one-on-one is better, at least for me, than having a 1-on-100. What happens when everybody can have access to like a really intelligent tutor, even if that intelligent tutor is I'm just making stuff up, but like an avatar or some sort of installation of AI?
Well, we're going to have to manage expectation there because that is where education in terms of what everyone wants, a long range.
For sure.
Where you have artificial general intelligence that basically can be your teacher 24/7. And to get to that, there were a country that already implemented that, Korea. Because get to that during their last year, March 2025, they have their first national AI digital textbooks in English, math, IT, anything from primary to all the way high school, and they spend like $870 million on it.
Wow.
And yeah. But the problem was like a year later, down the line, it wasn't really expected as like teachers in terms of the way that it couldn't really help students doing the assessment correctly.
Why is
And
that?
then there was some problem. Yeah, it was a problem with the implementation, the hallucinations, and
Got it.
there was a lot of logistics. Is exactly the word that you said. What happened when you have, let's say, state-run, enterprise-run, where you have got to have AIs that handle personalized, tutorings in the hundreds of thousands or million people,
Yeah.
for something like that. And what happened was they actually had to roll back, from mandatory textbook into educational material. So it wasn't really a failure. It was just the fact that you really have to manage the expectation, where I believe that personalized AI tutor is a great tool to maintain retention, but it's not really like the panacea cure all where let's toss this AI, let's spend, chatbot 24/7, and then I'm going to be able to get like, let's say, CFA certifications, something like that.
Right.
It's you got to take a hybrid approach where you want to have a personalized AI tutor keeping the pace of your learning or micro learning, for that matters.
Yeah.
And then you need the assessment from actual human expert.
So I love, I love.
Yeah, go ahead.
I was gonna say I love when my guests read, like it's almost like you're looking over my shoulder and see that I wrote down the word hybrid on my note page. To tell me what, just go on.
No,
And tell me,
it's just reality.
I know, but tell me why,
Yeah.
because I think it's a metaphor for the rest of the industry as well, right? Like a lot of people talk about autonomous agents doing X, Y, and Z, and I'm like, when I was working at Goldman Sachs, I was pretty senior, but I didn't have 100% autonomy. So talk to me about this hybrid method for teaching, and can you also, I want you to put it into this context if you think it makes sense. But this is a few years ago now. I would say like 5 years ago. But we're having a conversation with a guy named Alvin Wong-Grelin, who was at the time the head of HTC in China. And Alvin mentioned to me that like one of the most effective use cases of the VR technology that they had on their headsets was they did a sort of controlled test, and they found out that if they used VR, it intensified the learning. And I'm curious if that's part of the hybrid model, because you mentioned the meta. I haven't spoken about the metaverse in years now, but you mentioned this. And is there some kind of combination between immersive learning using artificial intelligence as a hybrid way of then accelerating or, just making the learning methodology stronger in this hybrid model, if that makes sense?
Yeah, it makes perfect sense. And we have done it. Let's talk about Duphonics a little bit, and then we'll go forward to what you're saying on the hybrid metaverse and AI.
Go ahead.
Because like what we did with Duphonics using metaverse, even though at that time there weren't any AIs, but the immersive learning part, we actually infused, videos, telenannies, materials, 3D objects, and children were engaged. The whole point about young learners, if you can keep them engaged, they'll learn because they're like a sponge. So it's just a matter of retention. But when you jump into something more like an expert domain, let's say like in college, because like currently I'm with CSII, like I'm an official mentor at Basai Chulalongkorn universities. They have to do a lot of research. Then not only the kind of research where they're going to have to quantify it and then publish. And that takes a lot of time. That takes a lot of effort with a big team. So by using something like Hermes agent, which is what we're using right there in Chulalongkorn, learning and using it, they were able to shorten the time where something that used to take weeks into a matter of hours, and then output that into text, and then you talk to the chatbot. So I think it's a matter of delivery and also the audience of how you want to inject it to. Let's say if you're like a CFA analyst, right? Like you, for example, like Goldman Sachs, you don't want immersive. You want real-time, on-the-spot decision support system. That's text. But if you want something like a pathfinder, let's say a long range where you got to keep the engagement, then yeah, absolutely. Metaverse plus AI, I'm all for that. I mean, if that makes sense. Yeah.
So are you testing some of this stuff that you're doing at Basai? And we should tell people what Basai is. So the Chulalongkorn School of Integrated Innovation, it's like it's a sort of, I don't want to say new school because it's actually been around now for 6 or 7 years. But it's a new way of thinking about teaching. I see you have the shirt on, CSI. I like it. I've also taught there, just so you know.
Exactly.
Which I find kind of funny. But are you testing some of these theories there? And what are you learning from the feedback that you're getting from the students? Because a freshman's going to give you different feedback than a junior or a senior as well. I'm just curious, like what kind of feedback you're getting for this type of personalized learning through artificial intelligence in a hybrid environment.
I can tell you right now, because a year ago at Basai, AI was about, how chatbot can just deliver me a paper, right?
Sure.
Everyone was like, the students just like using paper to turn in, and then the whole thing turned to AI slop. But us being the A school approach, where we match the startup teams with a mentor like me, we change a game where instead of we have like a paper-based assessment, what we do right now is basically you have to build a startups. You actually have to get users. You actually have to, hit the traction. So they can't really use AI to cheat. They literally have to use AI to ideate, build a product. So they actually have to register in those classes to use autonomous agent to shorten the time on ideation, get to the user, all the way up knowing how to use the agent, getting the customers. So that's the hybrid approach where we want to use the AI with the students. So we're not only testing this with this Basai, I'm testing this with some of the students at NTU. And the outcome is great because how can you cheat with AI if you're going to have to build a startup and get users?
Yeah, I mean,
that's impossible.
Well,
yes,
I mean,
in a way, yeah.
Yeah, I mean, look, one of the things my grandfather used to say to me is if you're cheating other people, at the end of the day, you're really just cheating yourself. And this is true with artificial intelligence as well. If you're just leaning on it, it's the only thing you're doing. You're just cheating yourself, particularly when the output is, or the outcome is meant to be a viable company, even a small one, with real paying customers. I'm curious if the stuff you're doing both at NTU, but also at CSII, are there places where you see agentic AI learning being more effective than other places? Do you know what I mean? Like, I don't think anybody wants to learn advanced mathematics, I think, as you were saying, with agentic AI. But maybe there's some other places where you're finding it more effective. Can you talk about that as well?
Well, if you're talking about adaptive learning using agentic system, I really don't see that in college just yet with the students. But I see that happening with the lecturers, where they have to see through, like research, especially in Basai's. We literally got tons of mothball dissertation that haven't been used in ages. So what they do right now, I mean, what we're working right now is building autonomous agent that go through those, doesn't matter, is fragmented data, paper-based research 10 years back, rag it, get the most important information and turn that into a curriculum where you can turn that into a product for the lecturers themselves. I mean, that's the real use case we're doing right now. Yes.
So do you want to just for people that don't know, do you want to explain what RAG is?
Well, it's basically RAG is like database with AI on top, if you really want to use it as like a layman terms in a lot of ways.
Retrieval
augment
operations, because out it retrieves information, then it augments that information.
Exactly.
How has it changed the way educators present information? If they know that there's going to be an agent also doing some of this stuff, like in a hybrid world, someone's going to have to decide what the human teaches, right, and what they focus, and what the AI then either enhances or enables or does that. Like how does that change the way the teachers or the educators think about the material that they're presenting and how they present it, if that's okay to ask?
That's great. Yeah, sure. I mean, that's what we're doing right now. That's what I'm doing right now. One is what actually the easiest use case is to help validate, because we have so many different type of research and also methodologies, especially in the college levels. So to have AI help as like a super enhanced search engine to validate information, that saves a lot of time already. That's one. Number two, it saves time and enhance a lot of productivities in terms of you can test it out more on the contents of the curriculum. Like you can shoot out 10 and use your human expertise, see, okay, that would be something that I want to actually use in class, and that would be a hands-on learning. And thirdly, I think that's like a long range kind of thing. I believe that with AI, we can actually get the personalization in terms of data from the learner themselves, and then build like a long range pathway. Because like usually, if you could want to have effective AI, it doesn't matter. I mean, I was in FinTech too. Like, I built like one of the first fintech, like StockSmart.com in 1999, and there's a parallelism. It's not the UI, it's not the app, it's the data, and that's why Bloomberg is like, the definitive right now.
Yeah.
If we compare from the 90s to now. So education is the same way. Like, how can we actually turn personalization data of the learners and turn that into an outcome that AI can actually help build those pathways? That human can't do quickly. Yes.
How do you also measure? Do you know what I mean? Because like at the end of every quarter, not the end of every quarter, but the end of every semester, at the end of every year, educators are being evaluated both by their peers, but also by the students as well. How do you go through and do an evaluation about the efficacy of what the agentic AI is actually accomplishing in the educational space? And then how do you take that feedback and make the agents better at what they're supposed to be doing? And how involved are the educators, the human educators, in that process as well?
That's like $1 million questions right there. Because
$1 million. Just so you know.
Because that's where the investors could be asking, like, how your AI is different from other AI. If it's just teaching IELTS, if it's just teaching, let's say, the English efficiency,
it's
or
a fair question,
Chinese.
though, right?
Yeah, it is. I believe that the best way to do the formula for AI to actually measure both the human learner and the AI system itself is actually the attention, engagement.
The engagement.
Yes, exactly, because that's how we test it. If social media campaign worked, if we test this, if that marketing campaign worked. So the outcome is not really more sales. Outcome is how we can get better learners, right? Yeah. So if the AI can actually provide an outcome, quantifiable ways that we can see that there's actually an attention and engagement from learners, that's an instant win right there. Because I'll be honest, like how many different ways can you test a student on their IB to get an A? How many different ways can you test a student that they get IELTS like 8.9? But if you can actually build an AI or a teacher that like, oh my God, we can get this student to actually stay and finish the curriculum. If you implement that in America, their literacy, which is like boots up, like instantly. That would be my answer. Yeah.
Got it.
Yeah.
Okay, man. Look, Kirk, thank you so much for coming in, doing this. Really interesting. And we should connect to each other. We should connect offline as well. I'd love to learn more about what you're doing at Basa.
I got your LinkedIn, and if you show up at Basa, I'm there often. So
awesome, man. Sure. Okay, great to see you. Good luck today. Have fun.
Thank you.
Thank you, man.
Have a good day.
Thank you. Okay, Martin. Let's bring David in. David, how are you? I am. So where are you? Got it. I like how you say that with a little wry smile. Look, it's great to have you on the show. We wanted to talk to you about how real-time commodity intelligence could potentially improve operational control, financial confidence, and emissions performance in hard asset industries. But before we dig into that in detail, tell us a little bit about Veridapt.Id I pronounce that right?
You pronounced it right. Look, thanks for having me on the show, and great to be here. I'm the CEO. My name's Dave Thambiratnam. I'm the CEO at a company called Veridapt. We're an Australian-based mining technologies company that has the lucky fortune or misfortune to help our customers around the world manage their fuel inventories. So most of our customers are customers that have got large mobile fleets that use fuel, either diesel or petrol or electricity these days. And what they need to do is be able to manage this. These are critical to their operations. They can never run out 24/7. So they need to know how much they've got. Where is it? Do I need to pay somebody for it? Do I have enough? Who took it? When? Why? And really manage it all. Because it's often their second largest expense. So what we're really doing is helping them manage theft and fraud, report on the availability, manage their procurement, handle their safety, report on their emissions, that kind of thing.
So as companies like do this stuff, and they do it globally, I mean, I think this is a uniquely global business. So some of it's local for sure. How are they approaching real-time visibility and then some sort of intelligent decision-making around that visibility, particularly in a world where artificial intelligence is becoming more and more ubiquitous?
Yeah. Look, I think for a long time, the physical world of commodities has suffered from a lack of visibility because, fundamentally, the way most commodities worlds work is you send somebody out once a month to take a look and see what's there. You put a dipstick in a tank, or you fly a drone over a stockpile, or it's a physical activity you've got to do. And so that difficulty of digitizing and having transparency means that people are used to having holes in the data. You loaded your ship with cargo, and that 30 days later it arrived at a destination with hopefully the same cargo, and between those 2 points you don't know what happens. And so the world of commodities is very used to patchy, holy data, mainly due to a lack of sensors and cost-effective ways of getting that information.
So that's what I was going to ask you, is like, why are not these massive, and let's just use oil tankers again as a proxy for every other way that these commodities are and every other mechanism by which they're being transported, like, why are there not more sensors or IoT devices on there so that, like, you know what I mean? When you've, again, put the oil into the big tank, that it's there the entire time. You know what temperature it is. You know what the wave structure is like out in the ocean, because that can impact the way this stuff gets. Do you know what I mean? And also, like, I don't even want to go down this rabbit hole, but like, this could impact the way insurance gets priced for this stuff. Maybe we can cover that at the end. But there's so many little nuances here. Is it just too expensive to retrofit everything, or why is there not better data on this stuff in 2026?
It's possible. Everything's possible these days. It's a question of aging fleets and the cost of retrofitting sensors in there. So putting sensors in tanks can be a costly thing if you have to empty the tank, especially if it's a working asset. So that can be one challenge to it. The real reason comes down to change. If you don't need to change things, why would you change it? And so a lot of times the world of commodities has kind of worked a certain way. You get a BOL at the start of your voyage, you load your oil on there. It's assumed that it's there. It's assumed that when it gets to the other end, it'll be still there. It hasn't been tampered with or contaminated with. The world's just worked that way for a long time and is used to it. Right. Pricing, risk, insurance, financing, it's all built around those metrics. So interestingly, our company, we are owned by a commodities bank, Macquarie Bank, and they do a lot of commodities financing. And what they've used us for is they'll say, hey, we're financing a cargo, or we're financing, $500 million worth of inventory sitting somewhere. And for us to have comfort, we want eyes on. And so they'll put our tech out there. And so sometimes financiers or insurers will actually want that visibility. We've done transactions where, inventories are stored in unusual locations or maybe unsafe locations. And in those scenarios, or where it's hard to send an inspector out, tech like this gets deployed for the purpose of satisfying the covenants or the insurer's risk.
Can we back up a little bit, if you don't mind?
Of course.
So many industries have gone through digital transformation, a term that I haven't actually used in a while. But part of that digital transformation is making sure, and I think you've alluded to this as well, is that the data structures that you have in place to understand what your inventory is, whether it's in commodities or frankly in like tires, like, it doesn't really matter. But getting the data right is the first step to getting the decision making, particularly when AI is involved, right as well. How close are some of these sort of commodities companies to getting their data right? Or does that have to happen first? Or are they trying to implement artificial intelligence first and then going, oh, our data's not, and then going back? Like, what is that process like?
Yeah. Well, look, I think I can speak from experience here on this. Companies are implementing AI, but the source of their data is often paper-based. So it's based on the whole data. So we don't have full visibility. We know our inventory once a month based on surveyors. I've got a customer in the US who, is a multinational with a lot of inventory across, hundreds of locations. Their reconciliation error between what their books said and what their stock take was $300 million.
But how is that? Let's slow down for a second.
Yeah, go on.
If I was sitting on a trading desk at Goldman Sachs, which I did do, I didn't know my position. And again, when I was trained as a trader, like, the first thing my boss said to me was, position is more important than price. Like, if you didn't know your position, you didn't know anything. And you can interchange that with the word inventory. But how can we have a gap of 300 million? If I had a gap of $300 million in my position on my trading desk, like, I would have been fired before the words, oh, we're out, you know what I mean? Out of my mouth. How is that possible in this case? And why is visibility, why are they struggling so hard with getting the visibility? Is there some cohort of people that don't want this to be visible? Is there that much fraud going on?
Look, I think you're asking a nuanced question there, and I think you probably know some of the answers. Look, to some extent, it's a change process. It's always worked this way. We accept these things. You write these losses in there. So that $300 million error was clearly not acceptable. The company found it to be an issue, and which is why we ended up serving them. But it happens at a smaller quantity, and it does happen. And people just accept and write these into the losses. A lot of times when you don't know your position, what happens is I might not know that I've got the position to do that trade, but I've still got enough inventory. So what I'll do is borrow from Peter to pay Paul.
Yeah.
So I've got, $500,000 worth of inventory sitting on site. I got to fulfill $1 million shipment. I'll ship 1 million and worry about that next problem later. And it sorts itself out over time. We've seen oil terminals where, you think that it's got 30 tanks in it and each tank belongs to one customer. But actually, if one is short, they'll use the other customer's product to fill the gap and continually daisy chain around to make sure that everyone gets paid out in the end.
Wow.
And there's literally losses. I've done transactions between traders and bankers, in Singapore, for example, where they're trying to reconcile the inventories and tanks, and there's actual losses every time. The reason why these losses are happening, it's partly because these are analog instruments. So, you measure things at the transfer normally. There's normally an error. Your BOL might say a certain volume, it's a different volume. That recon error is lost. Over time, these errors add up.
Yep. Then
there absolutely is pilferage, and there is fraudulent activity, and so you've got that going on as well. Mm-hmm. And then you've got mismanagement. Like I described, the terminals who are using each other customers' products to fulfill other products' needs.
Yep.
At some point there's a screw up, and then the things happen. So we see it happen for these reasons. The industry tolerates it because it's kind of accepted that's just how it always is. But I think you look at any modern terminal being built today, or any modern, inventory where there are sensor capabilities, they will build it in.
So that's the other question I was going to ask you is where are we going, right? In other words, are there incentives out there for people not to want to have the terminals be modernized, the shipping instruments to be modernized? And what happens when, because there's no, again, if I'm sitting on a trading desk, I can't take the guy sitting next to me and go I don't have enough shares of Toyota to sell this thing short. Can I borrow yours? Again, fired immediately. I understand every industry is different. In physical commodities, definitely different than digital commodities. But what happens when we get to a place where the data is actually more efficient? So we know exactly what the data is. We know what our positions are. And we're just talking about oil just because it's easy and it's the thing that most people understand. It's not the only commodity out there, obviously. But it impacts everybody's life. What happens when we get to a point where that stuff is much more robust and there is less fraud or less Peter stealing from Paul to make delivery and stuff like that? What happens when the data is more effective?
Look, I think you get a lot more efficiencies, right?
Yeah.
A lot of planning is based around the fact that there are errors, and so you have headroom to cater for those errors. Right. If I organize a shipment of oil to be sent to my port, I'm going to factor in that, there's a certain chance that there's going to be delays in shipments and logistics. So I'm going to make sure I've got headroom. There's also chances of errors and mismatches and numbers. So you always have a bit more just in case. And so what happens is you have inefficiency in unused capital sitting in inventories, sitting there. So from a pure working capital perspective, you've got capital tied up in the just in case contingency bucket that ends up getting freed up. So what you'll get is more efficiency. And because commodities are fungible, you can recognize these things. You can actually deal with them differently once you have the sensing capabilities. So you can actually get a lot more efficiency of capital, efficiency of resources, and optimize your operations when you actually have that eyes on. And it's why it's why our customers pay us, because basically the ones that do, they want that visibility so they can make quicker decisions, more accurate decisions, and make the best use of their capital.
How do current events, and we don't have to talk about these current events in particular, but how do current events impact people's desires to start deploying technology to get a better sense of, particularly in a world where I'm just looking at WTI, West Texas Intermediate, goes from $60 a barrel to over $100 a barrel.
Yep.
And now constraints on delivery are much bigger than they were, let's just say, I'm looking at the chart, in February or March. How does that impact people's desire to say, now's the time for me to get more sense-oriented, to get more technologically embedded? How does that change things?
It's very helpful for companies like ours because suddenly boards want to know how much inventory do we have? Do we understand where it's at? They ask for reporting. A lot of our customers in Australia have been, summoned to meet with the ministers in Parliament to talk about safety reserves and what do they have, when there's potential shortages that could, impact operations and production.
Right.
And so that visibility suddenly turns into, we don't have eyes on, we need more visibility. And so the phones ring off the hook then because people really want. And so where once upon a time, maybe they wouldn't have spent, a couple $100,000 or a couple $1 million in deployment, now they will do it because suddenly that eyes on is important. I can give you a really good case with
go ahead.
The military action going on right now, for example. Running out of fuel during an operation is critical. And, you can imagine what's going on right now. If you were to lose fuel storage locations in a wartime area and you need to deploy fuel from other locations, you need to know what you've got and you need to know where it is. And you need to be sure that you can get it. And so if you don't have that sense, and if you don't have that visibility, it's actually a real bottleneck. So times like this really drive that transparency and that need because you have to be efficient and you have to be accurate.
How sticky is it? I mean, when people sort of implement new stuff during, I'll call it a crisis, you can call it whatever you want, but how sticky are these implementations where, like you said, the phones are ringing off the hook? But if we get WTI back down to like $60 a barrel, if what's going on in the world kind of calms down, which let's hope it does, but if it does, what does that do to people's, again, desire then to keep doing what they were doing and understanding the visibility of the commodities that they have, again, whatever that commodity is? Or does it kind of dissipate because they're like, you know what, now it's not that important. We have access to way more inventory, so we don't really care as much anymore. Or does it just say sticky where they're like, okay, now we know stuff. We always want to know things. If that makes sense.
It's a bit like that. Imagine if you could only see your bank balance every week. And one day I said to you, hey, you can look at it anytime you want. And then I say, maybe you don't need it anymore.
What's 0 times 0 is what I want to know. But go ahead.
You'll have, no, generally speaking, what happens is once they get access to more information, they start to use it more frequently.
Yeah.
And once you digitize it, you start to integrate into your ERPs and into all your other systems of record. And then it becomes hard to walk it back. So this stuff gets very sticky very quickly.
So that's the other thing I was going to ask you is like, once you get access to this data, are you seeing people do unique things with it from an analysis standpoint using artificial intelligence? And are they leaning on you guys as well to make sure that they know how to do that, if that makes sense?
Well, that's where it gets super interesting, right? So we're fortunate in, like, say in Australia, our home market, probably 50% of the diesel fuel that's used in diesel, the diesel that's used in mining goes through us. Probably about 90% of all the fuel in rail goes through us. So we have a lot of data. And that data, our customers use that data that they can see, of course, for a lot of their critical decision making. Things like asset maintenance, things like route optimization, things like mine planning. There's a lot of decisions you can make with that data. And so we see some really innovative uses, bringing in machine learning. And I think now people are starting to throw AI at it as well to say, hey, I need to plan how I'm going to distribute fuel across hundreds of miles. What's the best way to organize where I store my fuel, where I move fuel around to optimize my operations? And so a lot of those kind of problems are now being thrown at AI. You can only do that when you have the data. Likewise, we see some interesting things in the US. We help some of our tier 1 rail customers manage their rail, and they've got to think about, where do I fill my fuel and what grade do I put in? Because depending on the grade of fuel, I pay different emissions taxes depending on different states I travel through. Right. So how do I optimize my spot price, fuel, type of fuel, and where I burn it to optimize that? And so once again, once all the data comes in, you can actually throw this at AI. So we see some really interesting use cases now going on with our customers.
So another thing, like, what is the implication on the downstream supply chain, right? Because commodities are never, like, no one buys a commodity and eats, and eats it. It's not like, something else happens to it after that always, whether it's refined or whether it's put into some other process or, from oil, like most people don't know, but it's made into plastics and all this other stuff. What is the implication on the supply chain of the lack of visibility for their inventory?
Yeah, look, I think, most of our customers will sign forward contracts, or long-term contracts to procure and ensure some kind of certainty of supply. That's how they do it right now. What that does mean is you're locking in certainty and price, right? Risk to compensate for it. That's what you can trade off when you have more visibility.
Yeah, I mean, let's be clear though. You can lock in a long-term price, but you can't lock in certainty on delivery.
No, but what you
and what normally happens, sorry to interrupt you, but what would happen is, let's say I lock in $60, and again, we're just using West Texas Intermediate. That's not coming from the, like, I get it, but just as a proxy for everything else, even if I could pay that price for it, or if I've locked in that price, if I can't get the inventory, I'm gonna have to pay a much higher price today in an emergency situation to get it. So like there is price discovery or price understanding or price certainty, but not delivery certainty. That's the problem, yeah?
So where you have visibility, the things that help downstream are, if you have transparency, we see that with some customers where they'll let you log in and see their digitized system. So you can see, you might have inventory on consignment, you have inventory on hold there, and so you can see that they can fulfill your requirement. A lot of in the downstream kind of cases, they'll do vendor managed inventory. So for example, they'll say, we'll take accountability to maintain a certain amount of inventory at your site for you. And by having visible access, so a lot of our customers will provide their suppliers access to our software so they can see how much inventory is sitting on site. And when it goes to a certain level, they'll fill it up. So by doing that, they can actually drive more just-in-time behavior and minimize unnecessary shipments and logistics flows to kind of just optimize that. So that's what it does. It gives you more certainty between the supplier and the buyer to make sure you can optimize that flow, because these are usually long-term relationships, and it's how you manage that. But equally, if I look at our South American or our US customers, being able to go on spot where you can see there's inventory and make a decision now,
right?
That's actually also super interesting. And we're seeing emerging markets where that is happening, where you can see, you can get it now and there's availability, you can procure.
Got it. What is there some sort of sustainability impact of all this stuff too, right? I mean, whenever you're talking about commodities, you could be talking about carbonization or lack of like, is there some sustainability impact on all this or no?
Well, there is. I mean, ultimately, a lot of jurisdictions are now requiring Scope 1 and Scope 2 reporting.
Yep.
And so with that comes a need to understand how much you've got and where you consumed it. And so whether you're talking about, say, a fuel consuming organization like mining or rail or defense, you need to know what you consume, where, how. And so that transparency and visibility, if you don't digitize it, what you end up doing is you say, you procured $1 billion worth of product and you consumed, 800 million. So you therefore have to kind of account for it somehow. And you have to model it. So, you pay a consultant to come in and do something for you. But if you have the digitized information, then it becomes really simple to produce those reports straight away.
Yeah. Sorry, go ahead.
And that in turn lets you optimize it. If you're trying to optimize your emissions to kind of claim carbon credits or have supporting data for it, having that information gives you that capability. And just one more point before I hand to you, provenance is the other one.
What's provenance? What do you mean?
Provenance, being able to justify where it came from. So digital fingerprinting or other kinds of supply chain technologies to make sure you understand the provenance. This is probably true for agriculture, where you need to show that this product was made with product that came from that country. Those kinds of challenges become a lot easier when you've got digitization of the entire stream of documentation.
Sure. Are there gaps that you see in the digitization? And by the way, I love the fact that you just said BOL earlier in the recording. Like everybody was going to know that meant bill of lading. In my head, no. I'm smiling because I'm happy. It's just like I know this because my dad's job for most of my life was like importing, whether it was fruit or meat and vegetables globally. So like I just heard bill of lading at the dinner table because he dealt with like some of the biggest shipping companies in the world. But I was just, as soon as you said BOL, my brain went through this like instant search for like, oh, I know what that means kind of feeling. But anyway, are you seeing a bifurcation, sort of a success bifurcation between companies in the commodity space that are actually digitizing their operations and those that aren't? And what happens when these companies that aren't doing it, at least initially, try to catch up? Does that make sense?
Yeah. Look, in the world of commodities, there's a lot of places where people don't necessarily want that transparency. So
but why?
Creates problems. So you've got a complexity between the producer, the people that do third-party storage, trader, and the financier, and ultimately the buyer. And so sometimes it is better to not have too much transparency. I'll give you a simple example.
Please.
I'm holding third-party storage of inventory, and customer A and customer B both are holding inventory in my warehouse of a bunch of product, and I need to fulfill an order, and I'm short by a couple $100,000 worth of product.
Right.
I'll borrow customer B's inventory and ship it. Customer B doesn't know; they won't know till the end of the month. Now, between now and then, I'll sort out customer B by taking from customer C. It'll all work out in the end. Nobody's going to get shortchanged. But I don't want everyone asking me questions about this.
Yeah. But they must. In other words, if you know this and if you're saying it out loud on a podcast that tens of thousands of people are going to see, like, are your clients going to call you and just be like, hey, David, that thing you said on the podcast with Michael, like, you're really taking our stuff to give to other people, and like, are we company C? Like, how do we know? if everybody's comfortable with this,
they're not. It's blissful ignorance or willful. So typically, the operational people would understand these. The financiers, the insurance don't. They think a tank is a tank, or a warehouse is a warehouse, and so they see it like that. So it keeps it simple. So the moment you give them visibility, the bank's going to be ringing up saying, "Hey, how come the position changed? There's no transactions." And then you've got to explain things, and you're confident that nothing untoward's going on, but it just creates reporting obligations when you do that.
But so this is the other thing I was going to ask you. Like, what is the impact on all of this kind of inventory movement? On insurance, on financing? Because look, I worked at Macquarie, not on the bank side, but on the investment bank side. And to be fair, they were a little loosey-goosey with the numbers when I was there. But what's the impact on financing and insurance if, again, is it, what did you call it? Like blissful ignorance, where they're just like, you know what, I don't want to know. As long as I don't have a problem with delivery when it's my turn, I'm okay. Is that the way this works? Because again, the guys and gals that are managing their inventory in a way that's efficient should get better financing than people that aren't, no? Or better insurance rates, yeah? Because they're running less risk, no?
Well, it comes down to whether they've got stated losses ultimately, right? So if they don't, the efficiency is lost on the insurer or the financier. What they're probably more looking at is whose inventory is it, and have they got a balance sheet to support if there's a loss? And have they got insurance for it? So that's what they're typically looking at. So where we've done transactions with banks, they're normally financing a party in a third-party storage location, which may be a little bit more dicey from a theft and fraud perspective. That's where they'll want complete visibility, and it does create a pain. So I've worked with banks who've had to say, "Hey, we're used to getting once a month reports. Right. The once a month report reconciles with our expectations, and we're good. But now we can see inventory every day. What are you meant to do when the inventory is down by 10%? Do we have to call them every day? It's like a new process. They're used to a once a month process.
Yeah.
Say stuff, we have to do something about it. And what do we do about that?" And so it does create. Most banks are unaware that this kind of thing happens.
Are they really, though? In 2026, they're unaware? Because here's the thing.
Promise you.
Yeah, I'm not saying you're misstating this. That's my way of expressing surprise.
Yeah.
Again, because when I go back and look at like stock positions or bond positions or even traded commodity positions at a firm like Goldman Sachs, or even at a hedge fund, they were all put into what we called separate accounts. And I think it's in the name.
Yes.
You know what I mean? Like I said, like the positions that were associated with company A were just associated with company A. They had nothing to do with company B. And you couldn't just like pirate off of one guy's stuff to give it to another guy's stuff, even if at the end of the day it all worked out. So it's just not surprising to me, but it's just interesting to me that there's an entire industry out there where people are just like, we'll figure it out on March 31st or whatever it is. You know what I mean?
It's the operations teams and banks or traders 100% know this goes on, but most of the financiers see it exactly the way you describe it. That's my asset. It's there. It's not moving. I get a monthly report saying it's still there. We are good, and that's enough from a point of due diligence. And look, 99.9% of the time, it all works itself out. So it's right. It's okay. But it does happen, and it's a interesting thing because the world of commodities is just messy. We've worked with the warehouses who are storing inventories. You got to move your inventory from point A to point B to make space, to move things around. Now, if you had cameras, we often get asked the question, can we put cameras on to monitor inventory? We got copper concentrate sitting in a dock or in a warehouse at a port. Can we monitor it with LiDARs or cameras? Yes, you can. But the warehouse is not going to want to have to explain to you every time they move your stuff why they did it, because that would be
Yeah.
a new process for them.
But what does that do to your ability to do business then, right? Because part of this idea is the visibility and the sort of countability and the accountability of where all this inventory is. Do you know what I mean? There is a cohort out there of people who are just like, what you don't know won't hurt you kind of thing.
What we have found is we offer the most value to the producer, the person. If the person owns title and it's their inventory, you know, you want to know what you've got. You need to know your position. So if I'm BHP Billiton or if I'm Nutrien, I need to know what I've got, and I need to know I can trade it. And so they tend to be our customers. They want to know.
Yeah, they have to know.
They have to know. And so that's where we would, you know, mostly serve. Where banks and insurers want to come in, it's often a third party is requesting invisibility. There's a bit of a, do we really need to do this? And then the Treasury will say, yes, we do. And so then they'll do it. But it's not their desired thing to provide that visibility, not because they're doing anything fraudulent, because they're mainly worried that there'll be unnecessary additional overheads.
Yeah, unnecessary additional work and sort of calculations that they need to make. There's got to be a big benefit for you guys to be in Australia just based on the structure of the Australian economy when it comes to commodities, no?
Yeah, no, it's fantastic for us. Obviously, Australia being a big mining commodities country, it's been great for us. And a lot of, you know, good tech comes from here. But, you know, I think the US is a great market. Canada is a great market. And, you know, some of the South American markets are also quite large for us. So
for sure.
it's helpful. Like in Australia, we're all ag and mining, right? That's a large part of our commodities. And so it's natural. A lot of tech comes out of here.
Again, when I was working at Macquarie, this was one of the things that I learned about Australia. Coking coal was something we talked about a lot. Like I didn't even know what that was before I started working there. But yeah, all interesting stuff.
What part of Macquarie were you in?
So I was running the portfolio trading desk on the equity side in Tokyo, but that business was essentially running all of portfolio trading, so equity portfolio trading in APAC.
Yeah.
So literally all the way from New Zealand and Australia. I sat in Japan, but that included the Hong Kong business and everything west of that to India too. So yeah.
Look, I love the world of commodities. It's frightfully complicated and convoluted, but it's so critical. And so you realize it's amazing things work at all.
Yeah. It is. Okay, David, I'm going to let you go. Thank you so much for spending so much time with us today. I really appreciate it. I hope you enjoyed this as much as we did.
Absolutely. It's good to meet you. Thanks for your time.
Very nice to meet you as well. Thank you.
Cheers.
Bye for now. Okay, Martin, let's bring King Leung in. Hey man, King, can you hear me? Awesome. You're standing, it looks like, no? Okay. I can. And you can hear me as well, yes?
Yes.
Okay, let's do this. Thank you again for participating today. We wanted to bring you in to talk about how AI infrastructure and investment connectivity will help businesses use Hong Kong to enter and scale across Asia. Maybe just really quickly, you can tell people about InvestHK just so they understand the perspective.
Oh, absolutely. Again, thanks for having me on your show. And again, Invest Hong Kong, it is a 100% Hong Kong government's department.
Yep.
Our primary role is to help international and mainland companies to set up and do business in Hong Kong. And since last year, besides attracting inbound companies, we are also helping outbound, and specifically for the mainland Chinese companies to set up their international headquarters in Hong Kong and help them to expand internationally.
Super. It's a great summary. Can we talk about how would you characterize the AI infrastructure in Hong Kong, and then maybe potentially its relationship to what's happening in China as well, if that makes sense?
Well, absolutely. Well, I think there are two levels I'd like to share with you and your audience. And that is super exciting for us. Now, first, when people think about Hong Kong, normally people think about finance.
Yep,
right?
Insurance and banking.
Right.
Trading.
So that's always a strength, right? The capital market, asset management, wealth management is always there. Now, the one thing that people may not have given Hong Kong enough credit is that we do have good innovation. It's just that in the past, now, in a way, if you are looking for the old ways of building a tech company, you may need to have like thousands of engineers, which in a way was a bit difficult to get such a large engineering pool of talents.
Yeah.
Now that with AI, then you don't need as many. So therefore, when we already have so much talents on the finance side to provide these great business ideas, in a way, execution using AI will be much easier. That require fewer talents to get things going. So this is the first bit that we feel that this is super exciting for Hong Kong. Now, the second bit of it is that when we just think about AI, broadly speaking, we are really looking at just the enabling technology. So it really comes down to what's the use case. Now, another piece of use case that we are also very excited is the combination of digital assets and AI. So sometimes
what does that mean when you say digital assets? Just so people that may not be clear on what that means, when you say the combination of digital assets and AI, what does that mean?
Sure. Well, let's talk about, for instance, something that is emerging is what people call agentic payment.
Go ahead.
Okay, and for that, we are talking about to bot transactions.
Yep.
And I think many people are talking about the really small micro payments, right? The A software to book tickets, and then you have another B software to pay for it. Of course, behind the scene, it's almost impossible to do this via the traditional way, using like a credit card, for instance.
Because
the infrastructure is simply not ready for really small transactions and doing it real time, where data just flows almost seamlessly. And this is where blockchain comes in. And for these transactions to take place, typically people are now associating with tokens. And the tokens is the unit of measure in transactions. And in many ways, you can also think of it as the tokens living on blockchain today, similar to how people think about stablecoins, for instance.
Right.
So that's why we're now seeing the convergence of these two phenomena.
Got it. So when you talk about the convergence of what's happening in the fintech space, but what's also happening in the Web3 sort of stablecoin and tokenization space, I want to back up a little bit. I'm going to say this a lot, and I've said it before, but like I did a recording and an interview with Yatsu, who's one of the co-founders of Animoca Brands. Yat obviously is a deep believer in Web3 technology and in obviously in agentic payments as well. I want to tell you something that he said, and I want to get your opinion on it. One of the things he said to me during that recording, in a way that was very excited. I love this guy because he's a deep believer. Yeah, was that cryptocurrency itself, right? So that tokenization was not really invented for humans; it was invented for machines. And I think one of the things you're suggesting is that payments, micropayments, the existing infrastructure for credit card companies or for banks weren't set up for this because it's too expensive for them. That's one reason for them to do micro transfers and micro payments, because every time they do that, it has an associated cost. But that when machines go machine to machine and they do agentic payments, the costs are so much smaller. It's almost like cryptocurrencies were waiting, or tokenization was waiting for agentic payments to arrive. What's your view there?
Well, first of all, the short answer is yes.
Okay. Go ahead.
And well, not only because I'm a big fan of Yats and his team. They have done an amazing job in putting Hong Kong on the map as a major Web3 hub. So we are forever grateful for all the contributions from Animoca. And in many ways, I think it makes sense too, when you think about just how the people have been thinking about the so-called killer app, right? From tokens. Now, if we are just so-called speculating on the token price, right, up and down, you can only go so far. Now, and interestingly, just the past 6 months alone, as I was talking to industry players, asking them, oh, by the way, what are the hardest conversations or the hottest use cases in the crypto/digital asset space?
Right.
People tell you cross-border payments to start with. So it still comes down to the basics. This is where the biggest denominator is, payments. So if we sort of elevate this conversation to the AI era, I mean, it still comes down to the sort of monetization, right? People are now talking about, okay, it's great that all these hyperscalers are investing, like billions and trillions of dollars into the infrastructure, but who's going to pay for it? Who's going to pay for the services? Where are those services, right? I mean, this is what people have been talking about for the last 6 to 12 months. Now that we can almost like extrapolate. Now, inevitably, when the infrastructure layer is built, the next level is the applications. And application guys will have to charge people something. So that for the agentic, the Gen AI to make sense, at some point of time, very shortly, it's going to be bot to bots. I mean, we can almost see it, right? So you just have to have some kind of infrastructure to pay for these kind of transactions. I think it's just a logical deduction.
So do you want to talk about stablecoins and where they fit it? Because Hong Kong is unique, right, in the sense that, as you said, the finance and the insurance businesses, but really like the money business in Hong Kong has been there for decades. Like my first time in Hong Kong was on a business trip with Morgan Stanley. I did tons of business when I was at Goldman Sachs in Hong Kong. I lived in Hong Kong for 4.5 months when I was building some stuff there. So the finance sector in Hong Kong, very, very strong. But most of it's TradFi, at least up until now, yeah? Most of it's traditional finance. What is the implication of the stable coins on that traditional finance business, but also on the cross-border trade, right? Because a lot of stuff that comes out of China through Hong Kong, through Hong Kong's port into the rest of the world, has to get paid for, and in some cases doesn't get paid for by companies or countries that have ready access to, to dollars, but they could have stable coins if they can get a wallet and all this kind of stuff. Like, what is the implication there? And how is that impacting what's happening in Hong Kong in the finance space, but also in the trade space?
Right. Now, so perhaps I would like to answer a question at 3 layers, because I think we're talking about different use cases or different segments. So let's start with the more obvious one, and that is the cross-border payments.
Right.
Now,
can I make a point to people that are listening?
Sure.
Because I do think it's important. The global cross-border payments and trade flow market size is approaching almost $1 quadrillion. It's just huge. And payment flows, specific B2B payment flows, again, just according to Gemini, are over 31 trillion. It's just gigantic. I just want people to get a sense for just how big it is while you're commenting on it. Sorry, please go ahead.
Sure. Okay. When we think about the cross-border, which is so obvious, for using the next generation of more efficient vehicle, and in this case, that is stablecoins. Now, we do have a bit of a minor problem, and that is actually something called trust. Because because at the end of the day, while if we talk about, let's say, SMEs, right, they only are transacting a couple $100,000 like a year, like small business, and they're paying like 15%. You're hopping across like 5 different banks to make transaction between Africa and China via Hong Kong. I can see that they are taking the risk, right, by using the so-called unregulated stablecoins. Now, if we really want to see stablecoins taking off, you have the bigger, right, companies transacting, the hundreds of millions, the billions. Are they really comfortable about using so-called unregulated stablecoins?
But are stablecoins unregulated everywhere in the world, or no? In some places, they're regulated relatively nicely, no?
Yeah. So I think there's some jurisdictions, such as Hong Kong, in which we have a law and then the whole regulatory framework. So as far as we are concerned, Hong Kong is one of the leading jurisdictions with the compliant stablecoins. Okay. Now, so let's just follow this chain of thought. So let's say that we have a number of more, I would say, the pioneering jurisdictions that have already the compliance stablecoins regulatory framework. Then the companies on both sides of that corridor, they will feel much more comfortable about using stablecoins to transact in that one regulated or compliance corridor. Of course, I think as more jurisdictions see the opportunities, they would slowly come on the bandwagon. So, but the key point I want to stress is that for any meaningful transaction or meaningful adoption by the so-called traditional mainstream companies across sectors, it has to be compliance. Otherwise, they're just too scared, right, to transact in big volume.
Go ahead.
So
you said you wanted to talk about three things. Yeah, sorry. What's the second one?
That's the first.
Yep.
Now, and then the second is actually what we just briefly touched on, and that's the micropayments. And that is with, let's just say, Booking.com, you want to book Airbnb, and then book the tickets, the number of transactions, and you're paying at the end of the day like $1 US for making that transaction. So that's the kind of micropayment we just talked about. So this is the second use case that we foresee. Now the third is really about the AI application. Now I think not necessarily in the sort of payment sense, but obviously for instance, the Hong Kong is very big in asset management and wealth management.
Yeah.
And as a matter of fact, we have seen this latest report from BCG maybe like 2 months ago that puts Hong Kong at the #1 spot, the #1 largest cross-border wealth management booking center in the world.
Oh, really?
Just in Switzerland.
Oh, okay, go ahead.
Just like 2-3 months ago when the BCG had released that report.
Got it.
Now, so based on that, the reports, in terms of the cross-border money, Hong Kong is managing in terms of AUM, $3 trillion US. Now, if you add in the local money, we're looking at $5.4 trillion US of AUM in Hong Kong alone.
Wow.
A single city, right? Now, so to now, as we see so much interest to chase after all this wealth. So we have seen, for instance, AI-enabled wealth tech that has prop up. And I mean, it's actually pretty straightforward. I think the thesis for one of the firms, in fact, one of the investors of such firm came from Animoca because they saw this coming.
For sure.
Now, so essentially what it is they said, okay, great, AI is awesome, but you still cannot completely replace human trust. You still need that sort of touchy-feely, like a real person,
right?
You call in case something goes wrong. So the approach that this startup has taken is that it's still the wealth management, the tools enabled by AI, but instead of directly to consumer or directly to the end users,
right?
It's actually intended for the IFAs, the independent financial advisors.
Yeah.
Right. So I think this is the approach, which I think it makes a lot of sense. So that this is just going to make the independent advisor, instead of serving, say, like 20 clients, he may be able to serve 200 clients, because now he's being empowered with somewhat intelligence to serve the clients in a much more personalized way.
Right. But do we run the risk then? I want to go back to stablecoins again in a second because of the trust factor here. But do we run the risk then that if they can handle more clients, even using artificial intelligence for personalized service, that it loses a little bit of that human-to-human connectivity that you've suggested is so important?
Well, at least based on what I understand from talking to the firm I just briefly mentioned.
Yep.
Now, first of all this intelligence and the prompts, the reminders, actually are happening behind the scene, in which the investors, right, or if I am wealth management clients, I would not be able to see. All I would see as a client is that my advisor will say, "Oh, King, actually, we have got this great news for you. We have got this signal in the market. You should consider switching your portfolio from A assets to B assets."
Right.
Which will do that. Now, actually, as far as I'm concerned, as an investor, I wouldn't know, right? This advisor of mine has been using whatever tool behind the scene
to let you know. Yeah.
It's timely.
Do we think that there should be some, what's the right word, transparency around where those ideas are getting generated? Do you know what I mean? Because normally, if an independent financial advisor calls me, he or she will say I've done this research, I've thought about X, Y, and Z, and blah, blah, blah. But if it's coming from an AI-generated thing, do we need to know as wealth management clients that that's actually being generated by artificial intelligence? Because again, this gets back to the trust thing that you were talking about earlier.
Well, I think this is now. By the way, I'm not going to commenting this from a government perspective.
Yeah. No. I'm just curious what your thought is. Yeah.
Intellectual discussion.
Yeah.
Right.
Yeah. Of course.
Because at the end of the day, I can imagine the following scenario. Now, so let's just say that some bad things happen.
Yep.
Actually, the licensed advisor, he or she is responsible.
Sure. Right. At the end of the day, they're accountable for whatever advice they give out. Yeah. Regardless of how it's generated. So
exactly. Now, so the other scenario is that let's just say that this advisor has a small team of some more junior analysts, and the analyst screwed up. Yeah. Right. He or she just wrongfully copy and paste the wrong thing. Right.
Yeah, which is possible.
Which is possible too. So in the end, I think it comes down to the judgment from the advisor for having that sort of like QC role in a way before advising the client. And so that's why I think that it's going to be a more realistic model for the AI-enabled advisors in this case, as opposed to directly AI telling the investor what to do. With a human person, if anyone's needs to go to jail, there's a real person,
right?
not an AI machine going to jail.
Yeah. I like how we have terms now, NHI, non-human individual, and then HI, which is human individual. It makes things easier to understand. We don't give investment advice on this show, and I don't expect you to give investment advice either, but Invest Hong Kong does have visibility onto things, at least at a level that most other people wouldn't have that same level of visibility. As the market changes, right, as we move away from an economy driven by sort of finance, where do you think, or what are you seeing startups and companies do? Like, what opportunities would exist for investors in Hong Kong that may not have existed before and that people may not be aware of today because they think about Hong Kong in one specific way?
Well, first of all, this is, as I said earlier, very exciting times.
Yeah.
Now, when we think about the kind of talents that we have seen coming into Hong Kong in the past 12 months alone.
Go ahead.
We have seen the international talents, and so again, even the US, Europe, firms coming in, setting up, because again, as I just mentioned, this enormous wealth here, the 5.4 trillion that we just talked about.
It's massive.
So it's commercially motivated for these folks coming in.
For sure.
And even the Chinese, right, the mainland Chinese smart people also came in from the hedge fund, the quants guys, again, different traditional GPs, private equities in different sectors. So we've seen quite a lot of smart people coming in. Now, so the good news is when we think about how much the so-called the international mixture of AI talents and technologies, Hong Kong is that one place where all these technologies got to be mixed to try and error and whatnot,
right,
to come up with the next generation of great products. Now, so again, because Hong Kong being part of China, and we have seen so much AI innovation going on.
Oh my God,
and
yeah.
In some ways, we are now kind of quietly, receiving all these like goodies to help us to upgrade our financial ecosystem.
So what is the implication? You're sitting there in Hong Kong, you work for InvestHK. What is the implication of what's happening in the AI space in China? I did an entire segment at the beginning of the show talking about CXMT, right, who just did an IPO. They just raised a bunch of money. Their stock went up 400 or something % on the first day of trading. But I mean, part of that's just due to because the float actually wasn't that big. But what is the implication in Hong Kong of companies like Moonshot, right, releasing Kimi K3 and DeepSeek and Quen and all these other, and Z.AI, which I believe listed in Hong Kong? Like, what's the implication there for people's perception of Hong Kong, but also the ability to get business done using artificial intelligence, and then encouraging other people to build businesses around that ecosystem in Hong Kong to make it more robust?
When we look at the valuation, again, I haven't checked the stock prices, but I'm just getting all this information from talking to investors that have been tracking this closely. So this is more like a secondhand information. Now, in a way, when we think about the perception in the past. Of course, I think the U.S. stock market is the deepest market in the world.
Yep.
And because of the high liquidity, traditionally or historically, the valuation in the U.S. have been very strong and robust. Yep. Now, and that has been the case for, I guess, who knows, decades. And interestingly, when the investors that we talked to, and actually we were quite a pleasant surprise. Actually, they have done some comparison. For the AI firms listed in Hong Kong, the valuation is also pretty exciting.
Yeah.
So it's by no means there's a discount, so to speak,
no,
about the rising star.
I wouldn't think so. Look, I mean, Hong Kong's liquidity in and of itself has always been really good. I traded Hong Kong stocks when I was at Goldman Sachs. I mean, when I was at other places as well, but I traded in Hong Kong. The market liquidity in HKMA has actually done a really good job of making sure liquidity there is really good. There are some stocks where the bid offer is literally hundreds of millions of dollars. So look, Hong Kong does not have a liquidity problem. I was more wondering, like, from a business building perspective, having all of this AI stuff going on both in China and outside of China. I mean, Hong Kong's not outside. I don't mean to say that in that way, but it is still a special economic region, right? It's still a special region, right? So it's not 100%. But the point is that, like, all this stuff that's happening in China from an artificial intelligence perspective, whether it's Huawei starting to make chips or DeepSeek designing its own chips, right? Or Manus actually having to come back in and not do, not be part of Meta, like all these little things that are happening. What's the impact on business in China and on the business of InvestHK in Hong Kong because of all this activity that's happening in the AI space?
Well, the short answer is Hong Kong has been doing the best we can to accommodate this demand. And more specifically, our government has launched a policy called Go Global. In fact, we have a Go Global task force.
What does that mean?
Well, what it means is for all the mainland firms that would like to expand internationally, we are that service center.
Hong Kong is.
Hong Kong is the service center. And Invest Hong Kong, we are the secretariat of this initiative. So that's why you can think of a funnel in which there are literally hundreds of thousands of companies from China across different sectors. They would like to expand to Southeast Asia, maybe the Latin America, Africa, GCC, Europe, and you name it. So obviously, not all these mainland firms are very international by design, right? By design, they were more onshore, domestic in China. But now that they've grown up, they become really good. They want to go out. So, but they may not have the right, people and the right kind of capabilities and so on. And this is where Hong Kong comes in, because Hong Kong has always been this hub with, in fact, 1/3 of our GDP is in financial services and professional services. So all these people are here to serve these mainland firms, including the AI, the new materials, new energy, right? The life science people, to raise money and then build a national team and then go out. So this is the role that we're playing as we speak.
Yeah, I mean, this does not surprise me, right? Again, my first time in Hong Kong, this will surprise you, I believe. My first time in Hong Kong was in July of 1990. So it was a while ago. But are we seeing a rotation, do you think, from not from an education standpoint, but from an employment standpoint, where Hong Kong does have this gravitas globally and this trust globally, right? So companies come through China into Hong Kong itself, and then in some cases actually rebrand to go out to the rest of the world. But are we seeing an HR rotation where some of the companies are actually able to hire people that might have otherwise gone directly into finance and bring them into another world where they can actually add some of their global expertise, global connectivity, and then provide that to these newer companies?
Well, the short answer is we have an influx of talents that we might not have before.
Okay.
So for instance, just 2 days ago, myself and my boss and other colleagues attended one of our clients' new store opening. And what they do is that they do trade the second-hand phones.
Got it. Okay.
Phones. Now, people are like, wow, this is very niche. And actually, little do we know, actually, Hong Kong is the #1 world's largest second-hand phone trading hub in the world.
Did not know that. Sorry, go ahead. Yeah.
I didn't know that either before we met this.
Right.
So it's an enormous amount of traffic of second-hand phones. In fact, China as a country basically changed from being a net importer of second-hand phones to now being a net exporter
Makes sense.
of second-hand phones. And of course, I think these phones got fixed and then somehow cleaned up and whatnot,
Right,
and then got to other parts of the world, including the global South countries.
Yeah.
So operating for Hong Kong. And of course, this whole process is not manual. It's almost fully automated. It's pretty impressive.
Oh,
so
wow.
This we never had. This is literally almost like a poster child of circular economy.
Yeah, in the used phone space. When we look at how the Chinese government, and I think by proxy, the Hong Kong government, is now sort of promoting AI businesses, what does it look like to you over the next sort of 2 to 3 years? And can you even project out like what that's meant to look like and what the impact is going to be on the Hong Kong economy?
The short answer is there will be, obviously on the finance side, there will be a lot of different adoption. And this adoption could be quite invisible, right, to the end users. So for instance, compliance or RegTech, regulatory technology.
Yep.
So instead of human eyeballs looking at all these papers, now you use AI. So that makes a lot of sense. But then most people on the outside may not know that the banks are now using AI to do compliance stuff. And this is definitely happening. So for the finance use case, both client-facing and back office, definitely gaining traction. Insurance company. For instance, I talked to one of the largest insurers in Hong Kong 2 years ago, actually.
Go ahead.
And one single year, they did over 100 AI POCs.
Really?
It's an insurance company just for Hong Kong. So that's why, again, I think which makes a lot of sense too, because for that particular insurance company, I was told they have more than 10,000 documents that can be like claim forms, product fact sheets. So you can imagine for any particular insurance agent, it's impossible to find all these documents. So this is where the AI comes in. So there's just a lot of AI use cases that Hong Kong being a very, well-rounded financial center, that there'll be just a lot of use cases.
Yeah,
so
I mean, it makes sense.
And I think the other bit is that there's also I would say the adoption from the non-finance. And that is, I would just broadly call them the industrial AI. Okay. Now, of course, Hong Kong is not the, I would say, not the market with enormous population. So that's why even for industrial AI to come to Hong Kong, we may not see like massive in terms of market size. However, but the Hong Kong positioning is a showcase, right? I mean, it's like a mini showroom, if you will. So therefore, the industrial AI firms, the robotics and so on. So when they come to Hong Kong, set up their international headquarters here, they are really interested to, in a way, align with international standards and the international ways of doing things. And also because Hong Kong being a very international city, it's almost like their coming out party to showcase to the world, okay, here we are, we're ready to go to other parts of the world. So Hong Kong is their first showroom.
Yeah. I mean, let's be fair. Hong Kong's proximity to that southern part of China, right, and also to Shenzhen and the connectivity that's been created over the last 2 decades has always given it a huge advantage. Okay, King, I'm going to let you go. This was awesome. Thank you again for spending so much time with us. I love when we have our guests from InvestHK on, some of the most knowledgeable people like in the entire region. So I really appreciate your time. Thank you so much for today.
Thanks for having me.
It's my complete pleasure.
Okay. All right.
Bye for now. Okay, Martin, let's bring in Alex. Alex. Alex, can you hear me okay? Alex, can you hear me okay, man?
And among three of them.
Okay, but you can hear me okay, yeah?
I can hear you okay. The picture gets frozen and laid back. Is that good?
I mean, as long as you can hear me, I guess we're going to keep going, yeah?
Okay.
So Alex, tell me a little bit about Tuya Smart and what you're focused on right now.
Yeah, so Tuya Smart is an AIoT cloud platform open for the developers worldwide who want to design any type of AI devices easily. So we offer the entire infrastructures, the end-to-end full stack software infra covering all the software engineering you need on the edge side, on the device side, on the cloud side, and on the user interfacing side. We give it in a full frameworks. So that's basically what we do. So we help the developers worldwide come from the different type of device brands, design house, and manufacturers.
Got it.
To make their job easier.
What are the three sort of ecosystems that you're focused on the most?
You mean the ecosystem? If you mentioned about the consumer ecosystem, right now we are the open platform that's collaborating with all the ecosystem worldwide, including the Apple HomeKit, including the Google Assistant, Google Home, including the Amazon Alexa and Samsung SmartThings. So and also including the Matter from the new open protocols. So we're collaborating with all of them. So it's become an open, interoperable platform.
Interoperable. Do you want to talk a little bit about AI Home, AI Energy, and AI Robot, and what those businesses look like to you, or what those sectors look like to you?
Yeah, so for us, that will be the major scenarios that people want to use AIs in those kind of physical worlds. So in the home life, and for the energy management to save more, to bring a greener energy usage and lower cost energy bill. And also including robot, it will be something we'll call generic robots that help you to solve some of the pain points in the physical world. So that'll be the three major scenarios we found out in the past 12 years that people want to build any type of smart things. That'll be the most massively used and with high savings in the marketplace.
Got it. What does the AI infrastructure look like, or the AI IoT infrastructure look like in each one of those sectors? Maybe if you can be a little bit more specific about what that infrastructure looks like for those sectors.
Yeah, so the three pillars, this is what we described, that when you're interfacing with the physical world, it looks like that how you deal with the world, with your body. So it's inside you have three key parts. The first one will be the brain, and to make the decisions, to understand everything and make the decision and make the comments. And the second one will be the nerve, that are gonna be the pathway that to transfer all the signals and pass on the messages out there. And the third one will be the muscle and bones. So will be the physical bodies that help you to do something, to push the buttons, to do some actions. So that'll be the three pillars we described. So Tuya is very interesting one that we're building a generic infrastructures, try to cover all different scenarios. Not only those three, right? Even more niche scenarios out there. So the key part is that you need to understand what will the brain looks like. So in the beginning, every people think that LLM will be the brain, but actually consider us as a human being, right? So any humans, maybe after 6 years old, they really have a well-developed brain with the right computing power. But doesn't mean that that's a person can do the right thing and make the right decision. What you need is the entire system and a knowledge base for the brain to understanding how the physical theories out there, to deal with all the visual and audio informations, and understand the social behaviors. And if you want to do that right now, interfacing with humans, so you need to get more about the psychological and nursing sciences out there. So what you need is not a brain with the right computing power and with the operation system, but also you need to attach different type of skills and knowledge around the brain. So what we're doing is that the decision-making center is our entire systems building on top of the LLM. So that'll be the first one. We put it down on the cloud, basically.
Yep.
And the second one, the nerve. So it's like the body is that you have all different type of nerves and the networks that to deal with all those kind of information you collect from the physical world, from my device, from those devices. That's how the device is being running, how the data device is censoring outside the world,
right,
and get back to you, and how you pass on the comments, and to be able to be able to fast, respond, secure, and stable. And it can work out worldwide. So that's the second one. Is we build a generic networking pathway across different of cloud infrastructures, different server networks, to make sure that you have a very stable nerve. And the last one will be the muscle and bone. So that'll be the device. So it will be devised to do two things. The first one is that the device will be able to offer you the sensoring and data. So to telling you what's going on out there, right? If it's a sensor telling you, okay, what I see, what I feel, what I sense. If it's not a sensoring device, but I can tell you, okay, what I'm doing right now and whether I'm okay right now, what I can do. So that'll be the first one, sensoring, to offer you the data about the status quo. And the second one is that to have the right capabilities to fulfill the actions. So the brain will be able to understand what I can do with my finger, with my I mean, two fingers out there, and I can catch whether I can pick up something, whether I can click on something. So understanding what's the exactly the actions the devices, what they call born ambassadors, can do, and then be able to send the right comments, and also be able to tell whether the action being accomplished successfully or not. So that'd be the third part. So for us is that we build infrastructures, is that combine the operation systems on the device and to collecting the right data and sending the comments and censoring that. And we're building the nerve, the entire networking and infrastructures worldwide. And we're building assistance on top of the NNM to build the brain. So that's what we offer for the developers out there.
There's a lot there, Alex, but one of the things that seems obvious to me is that one of the key important points here is just making sure that the data that you're getting, that you can then feed into the brain, to which the nerves and the networks can react and that devices can actually process. How do you go about managing an environment where there's like a fire hose of, like, even if the world stopped right now and we just had to organize the data associated with all of the things you're talking about, whether it's the home, the energy, the road, like whatever the things are, the three most important places where you're operating, how do you go about helping your clients manage the data, or at least having them understand like the status of their data from an infrastructure standpoint, so that all the things that you want to do, you're right, the brain's useless if it doesn't have sort of the right context and the right information and the right expertise around it. But even if it has that, and even if the device can process it, and we can talk about that in a second, how do you get the data right across all of these things, particularly when new data is coming in all the time? Do you know what I mean?
Yeah. I got your point. I think that's a long time pain point, and for the industry, and also for us, because we need to conquer that, step by step over time. And
but I was gonna say, Alex, more today than ever before, right? Because now people are actually using that data in real time to actually make real time decisions. And even if you have that assistance layer and even a semantic layer sitting on top of the LLM, you still run the risk, particularly if it's an IoT based thing, so an Internet of Things based thing, where it's getting real-time data and then processing it pretty quickly, if it can, that some of the data may be faulty. Like, how do you manage all that? That's hard, yeah?
That's hard. And also that's our values. So we built this platform like 12 years ago. So before that, there's no NNM. So we're talking about smart things, smart devices. Actually, there's no, back then there was not a proper brain that they can use. So it's more like you digitalize the devices first. So the key part is that you need to solve some basic infra concept in the beginning. So including like the generic theme model. So right now on the platforms, all the devices that my developers my customers build that they follow the unified theme models we offered. So which means that it's all the theme model, which means that we abstract all the key factors on different type of devices and standardize that into universal frameworks on the data side. That's the first one. And then we build a generic comment base. So which means that there right now on my platform, we offer a solution for over 3,000 device categories. And there was over 1 million SKUs, which means different device models being developed in the past 12 years.
1 million SKUs,
but
that's a lot.
No matter, that's a lot. That's crazy, right? That's crazy.
Yeah, crazy.
And but no matter what they are, and so we abstract all the common factors, and they follow all the generic comments. So consider as a CPU or GPU right now, it's like the kind of like a CUDA. So no matter which devices they're using the similar comments, they follow the same standard. That's the second one. And the third one is that we build a generic containers for them to put a different data in the right basket. So which means that the devices somehow it could be unidentified for us. So we don't need to understand what specific device it is. But then we abstract different type of devices into a generic math logic, and then make that interruptible. So, 3 years ago, while GPT first launches, we're so excited because we have this type of generic kind of data platform for such a long time. We just didn't find the right brain to use that. But we already have a very quite good, neat, and categorized database. And then after a couple of months, so by end of the 2023, we're already become LLM agnostic, which means that we're really compatible with the different LLMs, APIs and data points. And right now, all the developers worldwide, they can select whatever LLM they want to use and plug in the platform we offer to design their own brain.
So
I think that's a key part. So we standardize a lot of things in the beginning.
Sorry. Do you give access to LLMs to your clients, or do they come with their own access to it? And do you know what I mean? In other words, like if I have a subscription go ahead.
Yeah. So we keep it that open right now. Majority of my customers is that we just offer them LLM solution directly. So we finish the integrations. We finish different type of, and testing, verifications, and integrations directly offer to them. But it's still that we keep it open. If they want to plug in some extra stuff, not only LLMs, many of my customers, they plug in their own services, plug in their own existing systems. We have the entire bucket of open API, allow them to make us integrated.
Got it. What are some of the biggest friction points that companies face when they try to embed AI into IoT devices? Like, where are the problems?
I think that, yes, there are always problems ahead. Maybe I can share three. The first one is fragmentation. Because we are not focused on single application. Like I mentioned, 1 million SKUs. It's not a gameplay, right? It's very hard. And also that and many scenarios, I don't know why they build the device, what the device is for. So you need to be able to continue to build a good standardized frameworks to compatible to cross different type of chip, different type of and kernel, different type of data frameworks. So how you be able to cross that? So for us is that we continue to collect the common factor, continue to make the decision, make the judgment that will be the near field trend moving forward to, and what type of technology we need to bring in. So I think that's the first one. So on a very fragmented device world, we'll try to find the generic common factor. That's the first one. And the second one is that to make the right business decision, because right now we've already found out that so AI or no matter AI or IoT are gradually become a new foundation for the entire society. So it's useful for every single industry. But who should you approach first as business decision, right? So we always prioritize those kind of new opportunities showed up and those kind of niche demands. So that's why we choose the 3 key scenarios as my priority. So the home, energy, and robotic. So that's the second one. And the last one will be the cost and ROI. So it's, you know what I'm talking about. So it's not only about my initial investment, but also how you be able to justify all those token you burned and turn that into the right commercialized, applications to the market and useful for consumers and the customers.
How have you seen your token usage? I'll let you go after this, but this is interesting to me. How have you seen your token usage adapt over time? And do you know what I mean? Because at some point it becomes expensive. But if you're using models based in China, the cost associated with using those models, the open weight models, can be lower. I'm just curious, like how you're making a decision. You said you're model agnostic, but at some point you can't be dollar agnostic, right?
Yeah. So that's a good question. For us, we review. I think that in 2 things. The first one is that right now a lot of people talking about that so different cost levels among the U.S. and China LLMs. So I think that's just reminds me of those kind of globalization on the manufacturing industries around 30 or 40 years ago. Okay. That how different international companies to migrate their manufacturers from Europe to India to China or to Japan, right? So it's the same stuff. I think that's all international companies, they've really been there before. So for them is that they looking for the right way to be able to justify their cost allocation and in a compliant way. That's the first one. But I think that will be the easier option.
Okay.
What the point I want to make is the second one is that it's not only about how much you pay for each token you burned. I think that the pattern is more on what problem you try to solve. What's the business application you try to build, and what would be the more competitive, efficient way you build the application. Right now is that right now the battle is more dynamic. Is that some people say that as long as they're using a lower price token, they are fine, but they're burning way more tokens they should if they don't build that in the right way, and that the low cost token doesn't make any sense. Doesn't help at all. So I think that right now the key part is that a lot of people trying to figure out what AI can do and capable of, and how to do that and justify the ROI. So I think that's right now we try to focus more on the first to identify the first question clearly. Is that what would be the right scenario that and applications you should use AI, because they are good enough right now for some problem, and you know how to build that in an efficient way.
Perfect. Okay.
Rather than try to solve everything and burn down everything.
Yeah. Alex, look, thank you so much for coming and doing this today. Thank you for taking the time. Thank you for putting up with a little bit of an internet lag, because I thought you did that really well. You were awesome. And thanks for coming in and joining the show today.
Yeah, good to talk to you, Mike.
Great to talk to you as well.
Thank you.
Okay, bye for now. Okay, Martin, let's bring in our last guest of the day, Mr. Syed. Hello. How are you doing today? I am super great. Where are you based?
I'm based in Melbourne, Australia.
Got it. Yeah, Melbourne. I could tell by the pronunciation it must be Australia. It's great to have you here. We wanted to talk to you about how AI-powered growth systems help founder-led businesses scale beyond their dependence on just the founder itself. But before we get into that in detail, talk to us a little bit about what HookedGrowth does.
Sure, happy to. Thank you for having me. It's lovely to be here.
Thank you.
I'm an operator turned founder with almost about 2 decades in human capability, technology, product, and growth.
Got it.
I started in learning and performance. I was quite lucky to get into a large enterprise organization early in my career, JP Chase, and spent about 5 years as an instructional designer. My core job was building performance systems for humans, and how do we kind of analyze, assess performance. I started HookedGrowth about 18 months ago, and the goal with HookedGrowth is to provide an AI native management consultancy as a software. So help founder-led businesses codify what exists today so that it can be activated across various operational streams, whether that's marketing, sales, operations, and service.
Got it. And how are they approaching, like when you work with founders, how are they approaching the use of artificial intelligence to accelerate their business growth, if that makes sense?
Sure. Look, most of what I'm discovering, mostly through my network or talking to founders, is a lot of what AI is being used. And again, when we talk about AI, I think the understanding of what AI means is also quite focused on LLMs, although AI is such a huge sort of subset of technology. There's machine learning, there's a lot of different subsets under it. When we talk about AI in this context, it's just basically LLMs in the form of chatbots, right? Or agents, and you've got Cowork, Anthropic, Claude Code, Claude Design, but most of it is quite tactical in nature. So it's essentially just getting some thinking done, or maybe getting some content, maybe some research ideas. Some of the founders are starting to look at it more from an efficiency standpoint. So whether that's how do I automate all of this work so that I can either do more or save cost in human capital.
Right.
But that's where most of the application is happening today. And I think the problem isn't access to AI. I think everyone knows that they can basically get a subscription or get an organization account, get access to these chatbots and these desktop applications. I think a lot of it is, especially I'm talking to more service-based businesses, whether that's manufacturing, cleaning, or essentially founder personas who are not technical.
Right.
And one of the core problem I'm uncovering is, I have access to AI. I can, spin up a Cowork desktop app and do some things and get some output out of it. But I just don't know what to ask, and I don't know how to ask, and I don't have, and even the output that I get, I usually don't like what I'm seeing. So that's what I'm hearing.
Are you finding that they have the requisite technical skills, even if they're not technical themselves, to be able to understand how they can use it, or do you find that they actually need some guidance and some assistance when they're going out to try to use artificial intelligence to make themselves more efficient and more effective?
Most of the founders that I'm talking to is they would definitely need guidance, in the sense that understanding, first of all, what are you interacting with? What are LLMs? It's basically just the technology predicts the next word, right? It's just inference. Where a lot of the value is driven today is context engineering, or the harness around it. And we see these gains in software engineering as an example. It's a very deterministic workflow, and tools, API calls all exist within a harness like Claude Code. When you switch that focus to a business use case, let's say, for example, I'm a founder and I'm using Claude or ChatGPT just to create some marketing content, or I'm trying to respond to a sales email. You do get context through sort of connectors and MCPs and emails coming in, but a lot of the unique DNA about the business, what the founder thinks and how they decide things or what they stand for, still sits in their head, or isn't really documented in the right way for AI to get that context and then give a useful output. So I think that's where the problem is, and that's what I'm trying to solve essentially with my business, is how do we utilize what existed before, which is essentially performance management in human capital, to be able to codify performance expectations for these stochastic LLMs so that the context is there. And then as you start to use it in the operational workflow, the agents can tap into that context, which otherwise wouldn't really be documented in a structured way.
Are there other places where you see them using agentic AI, and are they using it to help them make decisions as opposed to just giving them information, if you know what I mean?
Not that I know of. I know a lot of like tools that founder-led businesses would use, like ERPs, CRMs, marketing tools, sales tools. They've got their own version of AI sprinkled. There's some more native versions as well, but essentially they're quite tactical and output driven.
Yep.
Many tools that essentially help a founder codify more of the tacit knowledge, or for example, strategy, vision, values, brand positioning. All of this happens through agencies or consultants, someone like me essentially coming in, and there's an engagement that happens, and most of the output is idly a PDF document or some sessions and one-on-ones or team workshops, right?
Yeah.
And then that basically ends up in a folder somewhere, sometimes not even used at the point of when it's needed. Some of the smart founders are kind of using it as context, so you can upload that and put that into your files and your projects. But yeah, I think that's where the gap is.
So you see things at like a 35,000-foot level. What are some of the things that you're sharing with some of the founders where like one founder sees this thing, one founder sees another thing, and then you kind of consolidate that information that you have and then share it out with some of the rest of the founders?
Yes, I think the core message that I'm sharing mostly is you have to approach this through first principles. And when you look at AI, yes, there is a software, you're chatting with something, but essentially you're kind of dealing with a stochastic workflow kind of tool, which needs certain sort of guardrails. So how do you start first to codify your business at a level where, first of all, there's the how do you decide what you need from AI? Which areas in your business do you want to apply? Is that an automation play? Is that a growth play? So you got to kind of have that discussion. And then for that, you need to kind of understand your business thoroughly. The second part is then what approach do you use to codify it? Whether those are documents or whether those are, and then what's the structure of that document? Is it authored in a way where the context is useful to the agency you're using, to the solution that you're building around? So I think that's where the opportunity lies.
So one of the things you talked about earlier was this idea that they were trying to employ artificial intelligence, to deploy artificial intelligence to lower costs, specifically from a human resources perspective. Are they finding that when they actually do deployment, not just experiment with stuff, that their costs are actually lowered, or are they finding that the tokenization costs that they're running up against then make things more expensive than they had initially anticipated?
I think it depends on the scale and size of the business. Most of my focus today is at really early stage to founder-led businesses that probably are around 1 to 2 million revenue and kind of scale, right? A lot of their expenses aren't really in-house human capital. It's more outsourced, work. As an example, right, most of it is around marketing or sales agencies. They also lean on external sort of consultants to do certain strategy work or figure out some positioning or get some content for the next 6 months because they're kind of expanding into a different segment or a different area or different geography. So they do see gains in terms of using AI to be able to get those outputs, mostly from marketing and sales. There's also a lot of CRMs that have given those gains as well. But as you kind of go a little further into the operational elements and start to look at automations, that's where still sort of like test and not really seeing the ROI the way they want to, essentially.
Got it. Okay. Look, Muks, thank you so much for coming on the show today. I really appreciate your time. Your insights have been very effective and very useful. So thank you again for joining us. I really appreciate it.
No worries. Thank you for having me.
Cheers.
Cheers.
Okay, everybody, that is it today for ATP Insights. Thank you to everybody we've had, as always, on our live broadcasts of ATP Insights. We've had a lot of people join us. And thank you again for spending so much time with us. Give us a thumbs up on the video. Subscribe to our channel on YouTube and follow us on all of our socials on X, on Instagram, and on LinkedIn. We're very active on X, obviously, across the platforms. We are very active also on Instagram and on LinkedIn as well. And as always, feel free if you're on the live stream to ask us questions. We'd love to have the back and forth activity and engagement with our not just with our guests, but with our viewers and our listeners. So thank you for that. If you can do more of that, that would be great. My name is Michael Waitze. I'm going to say goodbye for now.